Good evening, everyone. How are you? First of all, a very happy new year to everyone. I wish this new year, 2022, is going to be the best year of your life and you will become a CPA in this year. Can you guys please confirm if audio is okay? We can start. Good evening, Sapna. Thank you so much, Aditya. Same to you. Thank you. Thank you so much. It's good to see so many old faces, rather, I would say the old names and the new names also. How are you guys? How's the preparation going? How's your audit classes going? Good evening, Nikunj. Good evening, Siddharth. Good evening, Himanshu. Thank you so much, Bobby. Same to you. How's your audit class going? How's the preparation going? Are you done with your audit classes? No? Okay. Okay. Oh, nice. It's good to hear, guys. Okay, we can start today's session. Today's session, I'll keep it a little light, very basic, some basic stuff about the US taxation, what is the regulation course is all about. Very, very basic. I'm going to keep today's stuff. First of all, for the new students who I never interacted, I have not done the BSc classes with you, guys, feel free to ask any questions, whatever you face, anything. Three things which I need from you if you are doing first time with me. No preparation is required. So come clean slate, absolutely no preparation is required. You don't need to read anything. Nothing is required. Okay. Second thing I want from you is a lot of engagement in the class would be great, so that I will get to know whether you're getting it properly or not. In case you face any problem, please ask the queries in that case. In case I'm asking you any question, please be attentive on that and be responsive on that, so that it's a proper to and fro, because I can't see you. We are not having we are not having any kind of the audio engagement also, so I can't hear you also in that case. So it's better via the chat, at least you will be very much connected with me. Third thing, once we are done with the class, I would suggest please have a regular revision. I don't want you to prepare anything, but revision is going to be the key, because it is an extensive course. It will take some time. We will take almost 2.5 3 months in that case. So the key is going to be constant revision along with the classes itself. This is going to be tough, so I'm not going to paint you any rosy picture that it is going to be easy. It is definitely going to be a tough. Even if you are a chartered accountant, even if you are if you have read a CA, if you have read your indirect taxation in India also, it will not matter much a lot in that case. In fact, that's the worst thing if you have read the Indian taxation, because you are coming with a lot of preconceived notion, and I have to break those preconceived notion, so that I have to unlearn and then ask you to relearn in that case. So it's better you come with a clean slate and keep revising whatever we are doing it, so that by the time we are done with the course, you're ready to jump onto the exam itself. Okay. Engagement, can we have good engagement, guys? Everyone, can we have a good engagement? Thank you so much. Virat, we have recently finished the batch for the BEC. I think I've finished in that. Then we have done the 4.0 version only. You can see that. Okay. All right, I can move now. Okay. Your entire regulation, if I bucket the entire regulation is going to be regulation reg is going to be individual taxation, business taxation, business law, some bit of international taxation, and some bit of I would say the procedures, compliances, ethics, So in case you become a CPA, what are the things you need to take care of? In case you're filing the return on behalf of your client, what are the things you need to take care of that? What is the higher authority? What is the any assessing? The way in India we have the assessing officer, there we have the officers. What is the problem? All of it is going to be moved in that case. Okay. Business law, it will have a contract law. Something would you have read the Sale of Goods Act? So all of it is going to be the part of the business law itself. Generally, I used to start with either the business law or the individual taxation because this is relatively easy. So I start with the easier portions and gradually build it up and then move to the more complicated portion, which is the business taxation. But in our batch, many students would be attempting their paper in March. So I'm looking to start with the difficult first, so that I want to finish the difficult portion first, so that the easy portion I'll take it up later, so that anyone who wants to prepare after doing the initial January and the February, and after anyone wants to prepare on its own, that person can prepare on its own also. So business taxation is relatively considered to be the toughest one. Individual taxation is so much fun. It's so easy. Not so easy, but it is easy and it's so much fun also. So it should not be a problem. So I want to address the elephant first. I want to address the difficult first, and then I will go for the easy one in that case. All right, guys. So we'll start with the business taxation first. Okay. In this case, few terminologies, few things which will come across a lot. I'm going to address that. For example, you are going to hear a lot IRS. What is IRS? Who is IRS? What is the role of the IRS? Anyone, whatever is your knowledge. So IRS is Internal Revenue Service, absolutely. But what is the role of it? Okay. So the way in India, we have an authority which is called the CBDT. Yes, it's the authority for this. The way in India we have CBDT, Central Board for the Direct Taxes. The way we have the authority in India for the income tax. Similarly, we have the authority IRS in US, which is for the purpose of the taxation in US itself. So you will continuously keep on hearing that I'll say the taxpayer has filed. So in India, we call it the assessee, right? The person who is filing the return, the person who is submitting the tax thing and everything. We are not going to use the assessee. I will use the terminology called the taxpayer. And I will say it constantly, TP. TP is not time pass, but TP is taxpayer. Okay. So I'll continuously keep on saying that taxpayer is filing the return with the IRS. IRS is asking for the penalty and all of it. So that's the meaning of IRS, Internal Revenue Service. Basically, it's the authority which is going to facilitate the federal tax. We are just talking about the federal taxation in our regulation, right? Okay. Now, few broad concepts I'll talk about the tax, not much relevance for us. Taxation in US. Not a part of our course, Aditya. There are different authorities for that also. Department of Treasury. First, we have a federal tax. Federal tax is in a way you can say the central tax. It's in a way it's a federal tax, center tax in that case. Then we have a state tax. All the states have their own state tax itself. Then we have a local tax. Local tax is going to be city tax and the county tax also. Are we supposed to do all of it? No. We'll do only federal tax. Not possible for you to do the state tax. There are 50 states in US. You cannot possibly learn this. All of it, you can't learn it. So similarly, none of it is something you need to learn in that case. These are the very basic, Virat. It's your wish if you want to know this, but not much of a relevance. I'm just telling you broad only. Okay. The moment I'm starting the concept, I'll let you know that you can start from there. Though I suggested you in the last class also, guys, would be great if you're making a separate register. How you're making the register, I already discussed in the orientation session. Would be great if you're making a register itself, because there are many illustrations which are not given in your book, which I'm going to give it separately to you. So would be better if you guys can make the notes. Okay, so the taxation we are going to do in the reg, it is going to be the federal taxation. That means in a way center taxation. Is it clear up till here, guys? Yeah, okay. Let me share with you a broad, not relevant for us, Aditya. Again, you're asking something which is not relevant, something which is going to be for about the city and the local taxes there, the counties, the way we have the districts there, we have the counties also, and the individual taxation is going to be for that also. Okay. No, Venkatesh, good point. This does not come under the IRS. They have a separate authority. Every state has their own authority in that case. Broadly, this is what it is. US tax structure. It's the federal, which comes under IRS, as you were asking, Venkatesh. Then we have the state, then we have the city, then we have the county. These are the states which is most tax friendly. These are the less tax friendly. Are we need to learn that? Absolutely not. I'm just telling you just for your broad understanding. You have nothing to do with it. Okay. Types of the taxes, it is going to be income tax. But when I'm going to tell you income tax, I'm just going to teach you the federal income tax. I'm not going to tell you the state tax. I'm not going to talk about this local, county, city, nothing, just the federal tax. Social security tax, it is called the FICA also. It's just like you would have heard a lot FICA, you would have heard about the lot of insurance in that case. It's just like the way we have the PF in India, right? So that's a social security tax. Medicare tax, Medicare tax is that you are giving the taxes so that it is going to be giving, the government is giving back to you for the purpose of your medical needs and everything in that case. So that's the Medicare tax. Then we have the state and the gift tax. This used to be quite a big chunk earlier in your reg, but recently with the so many changes in the June 2021, it has been substantially reduced. It has been very, very much reduced for you. So we will still cover it on a very broad level. We will cover it because it is not anymore in depth for you. State tax is not at all for you. Types of the entity, don't worry about this. I'm going to discuss it. So it is going to be individual, sole proprietor, LLP, LLC, C corporation, S corporation, all of it we are going to discuss this. So don't worry on this. No, Aditya, sales tax is not in our course. Okay. Individual tax rate, guys, individual tax rate is going to be 10 to 37%. It's just like a slab system, the way we have in India. It's just like a slab system only. So that means if you are rich, that means your income is going up. Obviously, you will pay the higher taxes. In case your income is less, you'll pay the lesser tax. It's just like a progressive tax. It's just like a progressive tax structure. Okay, depending on status. So two things dependent on: one, what is your income? Second is what kind of filing status are you having in this case, right? All kind of filing status is going to be here. So if you're married, filing jointly, what is going to be status? If you're single, what is going to be everything is going to be there. So it's going to be depend on your filing status, which filing status you are having. Second is how much income you are having in that case. Okay. These are the filing status. Don't worry. We will do this in the individual taxation. In case of a capital gains, guys, capital gains, that means long-term capital gains, you are getting the preferential rate. Preferential rate. Okay. Preferential rate is only available for the individuals, right? So I'll repeat so that I know first time when you're doing it, it's slightly overwhelming. So as I discussed, these are the things we are going to do it. Okay. Individual taxes. So individual, as I said, it is 10 to 37%, and it is having the preferential rate, which is 0 to 20%. This is only individual. Okay. Not for the business. Business, we have a flat tax, which is 21%. No preferential rate for the LTCG. That means long-term capital gains, no preferential rate. State income tax, not at all relevant for us because we are not going to cover this, but generally it hovers around 0 to 15%, depends on which state are we talking about. As I said, federal tax is going to be 21%. Rest of it, I'm going to cover it later. we can discuss it later, all of it. One last point on a broad basis I want to cover before we further dive into it is I will use way lot in the codes. It's called going to be TCJ. Anyone what is aware what is TCJ? Absolutely. It's the Tax Cuts and Jobs Act, right? We call it TCJ. Some people call it the Jobs Act also, right? So this is a significant change which the Trump has brought in. This is a very significant change in the entire US taxation itself. So I will tell you most of the thing pre-TCJ is just like an era, right? The era is going to be pre-TCJ and the post-TCJ. So changes have been so substantial that changes have been very, very much changed here. So that means I will keep telling you all before TCA, this used to happen, post TCA, this used to happen. So that's why I'm just telling you the word terminology, which is TCJ, which has come in 2018. So things which are changing after that is going to be this, things before that is going to be this itself. Okay. Most of the changes which is brought by the TCJ is temporary in that nature. So that means things with the TCJ, Tax Cuts and the Jobs Act is coming, is valid from 2018 to 2025. I know you must be thinking what will happen after 26. After 26, whatever is the status quo under 27 will come back unless the Biden is going to confirm the changes, unless the Biden brings the changes. Are we supposed to know what is pre-TCJ and the post-TCJ? Not at all. Not at all. For you, the relevant point is 2021. That's all. What will have to happen after 25? None of our concern, right? Just don't worry about it. Don't waste your energy. It's a mammoth of the task. It's a mammoth of the task in our course only. It's so many figures you have to learn. So don't waste your energy in thinking what will happen after 25. What is the figure of the before 27? If we do the figures what we have in our course, that's going to be more than enough. So it's temporary. I'm just telling you for your understanding, but you just ignore that. That's not at all relevant for you. Most of the changes are temporary, but does not matter to us because for us, the relevant period we are looking is going to be 2021. Okay. The next question, which I get a lot from regarding the regulation, do we need to learn any section numbers? Not at all. Not at all. We are not supposed to cram any section number, any case laws, nothing. Not at all. Any form number. Some form number I'll keep on using it. So in the entire regulation, maybe I'll tell you 5 to 6 form numbers. I might keep telling you, but you ignore that thing, right? Ignore those points. I will say you just need to learn 4 to 5 form numbers. That's all. So you will really learn the individual, which is 1040. You will learn for the corporation 1120 as corporation 1120 as. So these are the very 4 5 you need to learn. That's all. Besides that, you don't need to learn anything in that case. Focus your more energy on the conceptual side of it. This exam is not about the cramming the form numbers, cramming the section numbers, cramming the case laws. This exam is not about this. This exam is more about how much conceptually you are understand and capable of understanding that case. All good, guys? Any question? Regulation is going to be linked with the FAR. Some portion you can say, Veer, because you would have read in the FAR, I think the deferred taxation you would have heard. Is there? Oh, you have not. There is no deferred taxation. Then I don't think there would be any. But Aditya was saying that you have heard a lot about TCJ. So what was the relevance of that? Or maybe the IRS? I think you were saying about the IRS. Maybe you can suggest, Aditya. In what topics have you heard about this? Yes, book. That's what I'm saying. Deferred taxation only, Lalit, right? So this is going to be the book profit. This is going to be the tax profits, permanent difference, temporary differences, right? Nothing beyond that. Yes. So in this case, guys, you would be aware there are two sets of the books. One is, yes, I think so. I'm not very much familiar with the FAR topic, so only people who have done the FAR would be able to answer that. But I think, as Lalit was suggesting, would be there only that your books of accounts, that means your book profits, and then it is going to be profits as per the tax. That means this is as per IRS, this is as per US GAAP. No, Josna, don't, not at all. Generally, this is very much a wrong notion among the people that you, I think someone was asking me in the orientation also, shall we finish all the 4 subject preparation and then attempt the paper? I don't think so at all. I have many students who just finish the batch and then they give the exams. It's not a very good idea that you finish all the 4 subject and write the exam, because then you will never be able to write the exam. Amendments will come, then you are doing the amendments, then again amendments coming. Not at all a good idea. Generally it's annual, guys. So whatever we are doing it right now, whatever, good point, Arjun, whatever we are doing right now, it is going to valid up till June 2022. Unless something major happens, and they are going to change it because of the COVID, that's a different point. But these changes are pretty much valid up to June 2022. In case there is any changes, I'll keep a separate amendment class for you. Don't worry on that. Are we good? Shall we move? There is a parliament which passed that. There is a parliament which is called the Congress. There they pass the bills and they amend it just like that, only the way we have in India. Okay, we can start this. I'll start with the business entities, guys. Business entities. Business entities, guys, if I talk broadly, I can classify the business entity into the 2 categories, right? First is going to be double tax entity. Now you can copy if you want to. Double taxed entities. And second is going to be the pass-through entity. Double tax and the pass-through entities. Okay, what is double tax entity? The name says is the tax is going to levy at the two level, and pass through, that means the tax, everything is passing on to the other person, and then the person is paying the tax. For example, if I talk about here, let's say this is the company P&L. Let's say here, this is the sales. You're booking your COGS. This is the PBT. And then the company is paying the tax on it. And eventually it is distributing it to its shareholders. And now the shareholder will pay it's a dividend for shareholder, and the shareholder will pay the tax on it. So that's the tax, that is going to be the tax number 1. And here, this is going to be tax number 2. I know when we hear from the Indian perspective, when we hear the double tax, we always think that same entity is levied the tax twice. No, IRS consider, I know you must be thinking there are different heads. There are different, not the heads, different people, right? Different hands in that, but does not matter. IRS consider this entity as a double tax entity because it is getting tax at one level. And again, when the taxpayer is receiving it, the taxpayer is also paying the tax on the dividend itself. So that's why such entities are called the double tax entities. Example, for example, C corporation. C corporation is called as a double tax entities. Let's understand what is pass-through entity. Pass-through entity will do the same. It's the sales. It is going to be COGS. This is the PBT. This PBT, there is no tax here. This PBT will pass on to the shareholders. And now the shareholder is going to pay tax on it. So that's only the tax number 1. Why it is called pass through? Because you're passing through everything in that case. You're passing your profit, you're passing most of the other items. There are few items you separately pass on that. That's why it is called the pass through entity. For example, yes, absolutely, Urja. Even the partnership firms are like that only. Even there is a firm called the S Corporation, which is also passed like that only. These are the pass through entities in that case. Okay, now the question comes, why such a weird name? C Corporation, S Corporation. These are governed by, shall I move if you have copied? Sure, Arjun. Just confirm me, Arjun, once you're done. Wonderful. Why such a weird name, C Corporation, S Corporation? Because C Corporation is governed by subchapters C of IRS, Internal Revenue Code. S Corporation is governed by subchapter S of IRC. In India, have you heard about section 80C, 80C, 80D? Which section, which chapter does it come under? Yes, 150. Under which chapter does it come? It comes under chapter 6A, correct? It comes under chapter 6A. Similarly also, these are falling under subchapter C, subchapter S. That's why it's called the C Corporation, S Corporation. For example, if I talk about the partnership firm, it falls under subchapter K, but it is not called the K tax entities. It is the partnership firm. Done. Which point, Vinod? So Vinod, I was just saying that it is the tax is levied at the two levels in that case. One is when you're making the profits, right? It is your selling in this case. It is the tax number 1. When the entity is selling and entity is generating any profits in that case, that's the tax number 1. Second, when the profits are going to the shareholders, the shareholder is paying the tax on it. That's called the tax number 2. These are the two tax. That's why it's called the double tax entity. Clear? IRC, Internal Revenue Code. Anytime. It's just like the way different companies are, that's how they are structured in this case. That's how their various structure. If you want to incorporate the C Corporation, you have to follow this. If you are following, that's the various advantage and disadvantage of the various entity. That's it. Okay. All right, I'll move, guys. This I'm going to change it slightly. Because not everything which the company gives is going to be dividend. I will modify this, but it's on a broad level. I just discussed this. Shall I move, guys, if all good? Okay. Today I'm going to start with something which is very important, which is called the corporate distributions. Good fun topic, corporate distributions. As I said, guys, I have started with the biggest elephant. So stay with me. I know sometimes it is going to look a little overwhelming, especially when you're doing the S Corporation partnership. Stay with me because this is the biggest portion of it. This is the toughest portion of it. If you have done this, everything after that is just going to be very easy in that case. So hear me out. Everything what I'm saying, hear me out. This will answer 99% of your query. Anything after that, you please hear me out after that. That should not be a problem. It will not happen that most of the questions are coming from this, but this is important topic from the perspective of MCQ specialists. There's nothing important, not important in the CPA, but I would say it's an important topic, especially from the MCQ's perspective. Okay. Before I started here, so here what I'm going to tell you, whatever the company is distributing, I'm talking about this. Whatever is company is distributing. So I'm talking about this. This distribution, guys, it's not going to be dividend all the time. this distribution is not always equals to dividend in that case. So I'll come back to this. Before that, I will discuss about the basis, guys. What is basis? What do you mean by basis? Basis, if in a very simple terms, in a very vague terms, if I talk about basis is a cost. Absolutely, Venkatesh. It is your cost. So that means if I tell that, let's say if I am owning the stock of Tesla, I bought 100 stocks of Tesla at the rate, let's say $10. How much is going to be my basis? Correct. My basis is going to be $1,000. Correct. That's going to be my basis in this case. Guys, do you think, can my basis be negative? Question, can my basis be negative? Ever? Even if the company is giving me bonus shares? I was thinking, but if the company is giving me bonus shares, but still it is not going to be negative, right? Sapna, it is going to dilute it. It is going to dilute my basis per stock, but eventually it is not going to be negative, right? So yes, absolutely, basis can never be negative. Note number one, this is the most important thing in this case. Yes, Arjun, it's not going to be negative. I'm writing it, but you will find the relevance of it when you're going to do the S corporation and the partnership. It is extremely important point that the basis can never be zero. You will not find the relevance of it much now. You will find it when you are doing this after maybe class number 12 or 11, you will realize the value of this. So I think it is clear. I have not told you anything. You are saying the basis can never be zero in that case. Perfect. First of all, in this case, why is it necessary for me to find out that what is basis? Why I am so keen to know what is my basis? To calculate my return, or I can say to calculate my gains, how much the capital gains I'm having in this case. So let's say you are selling this, I'm selling the stock of the Tesla for $2,500. How much is my profit? Correct, to calculate the benefits. How much is my capital gains? So you are saying selling price 2,500. I'll reduce my basis, which is 1,000. This is going to be 1,500. This is going to be capital gains in that case, correct? Okay. Can I say this, guys, in this case that once I recover my basis, that means once my basis becomes zero, anything on the top of it is going to be capital gains. No? Let's see this. Let's say I have not sold it. Let's assume I have not sold it for $1,000. I sold it for 1,000 only. How much is going to be the gain? Zero, absolutely. So this is going to be zero. So that means my basis is zero now, correct? Now, if I'm telling you someone is giving me more money, someone is saying, okay, $1,000 is not the correct value. Let's take $500 more. Now my basis is zero. So that means anything on the top of my basis is going to be my capital gains. This is directly going to be my capital gains. Is that point clear, guys? No, Arjun? So I'm saying, Arjun, once I recover my basis, once I fully recover my basis, anything on the top of it is going to be zero. That's what I'm saying. Once I fully recover my basis, right? It is going to be absolutely, here I have recovered my basis. After that, it is going to be capital gain. Sure. Guys, let's do it. I'm saying is basis is Virat. My basis is 1,000. Okay. I am selling it for 1,000. How much is going to be my gain? Correct. But let's say The person says, no, you don't, I don't think we need to give 1000. I think you deserve 1500. So this is also, I can say that means 1500. I can write like that also. Correct, Virat? So that means once I recover my basis, anything on the top of it is going to be my capital gains. Or if I can plot it like this, if this is my basis, right? If this is my basis and this is going to be my selling price, then this portion here is going to be my capital gains. Clear? Okay, just make a note number 2. Once you recover the basis, anything beyond basis shall be cap gains. Whenever you're done, sure, Hemant, I'll repeat the note number 1. Basis can never be 0. Oh, I'm so sorry. Have I written? My bad. Thank you so much. Basis can never be negative. Thank you. Okay. Okay, whatever I'm saying, let's say, whatever I'm talking about, let's say the basis, capital gains, about whom we are talking about the company or about the shareholders? Correct. I'm talking about the shareholder only, right? Because that's who is going to be. We are talking about the shareholders only in that case. Absolutely. Now let's look into the distribution portion, which I started. I want to build this background for you, only then we can do it. So guys, if the company is giving any distribution, okay, we will first of all look how much the profit the company is having. How much the profit companies, hear me out very carefully, guys. 5 minutes, hear me out carefully. Company, whenever the company is giving any distribution to its shareholder, first of all, you look how much the profit company is having. What is the company's profit is called? It is called earnings and profits. E and P, which is earnings and profits. This could be two. This could be current year earnings and profit, something what we understand with the PAT, and it could be accumulated earnings and profits, something we understand in the accounts as a retained earnings. Okay, so first we'll see if the company is having any accumulated earnings or not. Second, we are going to check if there is no accumulated earnings, do you have any accumulated earnings and profits or not? First, we'll check, do you have any current year's earnings and profit or not? If not, we will come back to the accumulated earnings and profit or not. Is that point clear here? That's just looking part, it's clear what we do it. So whenever we are looking for any distribution for deciding the taxability, we'll always look how much the profit the company is having in that case. Whenever there is a distribution, guys, we follow a simple waterfall. What is the waterfall we follow in this case? The waterfall we follow is current year's earnings and profit, accumulated earnings and profit, return of capital, or return of basis. Lastly, once you recover the basis, guys, after that, what do you have? What is the note number 2? Correct. You will have capital gains. Just make a point of it. This is the waterfall you'll follow. I know you have understood nothing out of it, which is absolutely fine. Just make a note of it, then we'll move. Whenever you're done. Sure, Arjun. I'll wait for everyone to copy this and I'll move back. Done, Arjun? Okay. Anytime. Let's do one illustration on this. We'll understand it much better. Let's say company is making a distribution of $15,000. Is it dividend? No, absolutely not a dividend. What is going to be the dividend? I'll tell you what is dividend, but this is right now is not a dividend. When the company is giving the dividend, the company has current year's earnings and profit, which is going to be $10,000. Accumulated earnings and profit is let's say $2,000. Shareholder has purchased the stock of this company for $1,000. So when you have purchased it for $1,000, this is nothing but your basis. I will do this question. You are not going to do this, but hear me out carefully. Okay. Hear me out carefully. What is the first in the waterfall? What you have? What do you have in the waterfall? Current year. So I will allocate, guys. I will allocate distribution. So I am allocating the distribution. How I'm going to allocate the distribution? I will say this is current year. This is accumulated. This is reduction of basis. And lastly, it is going to be cap gains. 15,000. Distribution is 15,000. First, it will go to current year. How much is left in the distribution? How much is left in the distributions? Out of 15,000, this is out. So 5,000 is left. How much is the accumulated distribution? How much accumulated E&P is left? Shall I put 5,000 here? No, because we don't have it that much. We don't have it that much. So we are going to put only 2,000. Correct? How much is left after this? 3,000 is left. How much is the basis? Basis is 1,000. Can I make it 3,000? If I put it 3,000, basis will become negative. Can basis be negative? Absolutely not. Basis cannot be negative. No. So this is going to be 1,000. How much? Once you recover basis, what do you have? You have capital gain. What should be the value here? 2,000. Is that point clear, guys? That's the basic waterfall. We are going to follow it whenever we are doing it. Absolutely okay if you're not getting this. Absolutely fine, Virat. Let's do this. Okay. Sure. Don't worry, guys. Distribution is 15,000, guys. What I said, whenever a company is making the distribution, this is the waterfall you are going to follow in this case, right? What is in the waterfall first thing in this case, Arjun, Preeti, what is this? Purvi, current year earnings and profit. So first I will take 15,000. I will start with 15,000. From 15,000, I will reduce 10,000. How much is left? 5,000. Then what is the next thing? Accumulated earnings and profit. How much is the accumulated earnings and profit? 2,000. Can I reduce the 5,000 here? No, because only 2,000 is left. So I will do 2,000 only. Rather, let me just do it. Wait. This is, let me just put it here, the balance. So 15,000 reduced by 10,000. So 5,000 is left. Now 2,000, the balance is left 3,000. Third, what is the third thing? Basis, reduction of basis. How much is the basis? 1,000. Shall I reduce 3,000? No, only 1,000. Correct. How much is the balance left? 2,000. Cap gains. How much is going to be the cap gains? Whatever is the balancing figure is going to be capital gains. Is it better? Is it okay? That's what I'm saying. Hemant will not compare with the Indian taxation, else we'll be all over the place, right? It's everything. Every time we are going to do this. Every time we are going to do this. Sure, Arjun, we'll discuss it, but can we just quickly try one question? That's the waterfall which is suggested by the IRS, that whenever we are doing this, you need to first gauge whether do you have sufficient profit or not, because it could be that you are giving you're giving the distribution, but you do not have the basis, you do not have the sufficient profitability. In that case, it makes sense that you make the capital gain for the other person in that case. Okay, anything, it could be anything. I'm going to come back to that also. What is distribution, what is not? Okay, can we try one or two few questions? So that at least conceptually we'll discuss it more, but at least question wise you should be okay. Okay, can we try one? Current year's earnings and profit, guys, is $10,000. Accumulated earnings and profit is going to be $5,000. The basis, the shareholders basis is $8,000. Okay. Let's see, the distribution is going to be first scenario, guys, distribution is 15,000. Just make like that. And cap gains. You need to tell me how much it is going to be the cap gains. I'll take up all the questions, guys. Let's first try everyone, else you'll not understand what we are doing it. Every time, Lalit, every single time whenever the company is giving the distribution. From where the company getting balance 3,000 for the distribution. Zero capital gains. Everyone, please try, else you'll not understand this. Okay, please help me out. What is the current year's earnings and profit figure? 10,000. Okay. Now this, how much should be the figure for accumulated? 5,000. And here, nothing. How do company will calculate the shareholders basis for the shareholders? Company is not going to calculate it. It is you will calculate on this. Whose cap gains? Whose cap gains are we calculating? Are we calculating the cap gains for the company? No, we are doing it for the shareholder only. Then why would company would be concerned with that? Okay, just a minute. Why negative 8,000? Why negative 8,000, guys? It's going to be zero. It's going to be no. Why negative 8,000? Are you selling it? Are you selling this? No. So when you're not selling it, when the company gives you, okay, let's see. Basis cannot be negative, absolutely. Tell me one thing, if the Tesla is giving me any distribution, right? Let's say Tesla is giving me dividend, would I have the loss? Will I have a loss? No, I cannot have a loss. Is that point clear, Arjun? Okay, even return, how can return be negative in this case? No, you are getting this. This is what the company is giving you. This is the distribution it is company is giving you. The company is giving you this distribution. Okay, everyone who has understood, I'll discuss with Arjun. Can you please tell me if it is 20,000, how much it is going to be the capital gains? Everyone, please try. No, Arjun, you're getting this when I'm talking about distribution. For example, in the second scenario, when I'm talking about 20,000, you are receiving 20,000. Again, zero. Really? How much? Please help me out. How much is the current year's earnings and profit? 10,000 accumulated. Now it has to be 10,000. No, but it is balanced, guys. What are you saying? 20 minus 10, it is 10,000. No? Correct. What you just cannot increase, you cannot reduce the accumulated. It is going to be 5,000. Absolutely. Now this is going to be 8,000 because this is 8,000. I don't know what are you doing. Is it not? Yes, it is not going to be this. It's just 5,000. It's just the waterfall you will follow in this case. Now, how much is going to be there? 2,000 is going to be my loss. Is it? No, we have exhausted 20,000. Nothing is going to be left in that case. Absolutely, this is going to be zero in that case. No profit, no gain, nothing in that case. Obviously, in this case. Clear? Shall we try anything? It means we are not able to recover cost in this case. No. Okay, guys, I'll just take a point here. Here, we are not selling anything. We are just not selling anything. The question which you are directing, we are having zero return. I'm not able to recover. We are not selling anything. When we are selling, then absolutely whatever the question you are asking, we are not recovering our cost or anything. That's a different point. Here, the company is giving the distribution. This is a waterfall which is suggested by the IRS. IRS says, first check how much is the profit the company is having. Then the company does not have any profits. Please reduce your basis. Anything on the top of it is going to be the capital. If you read the language of the IRS, it is extremely complicated. I try to make it more steps for you so that it's going to be easier for you. Current year's ENP of the company, it's pretty much like a PAT of the company, Ashish. Okay. Third, let's try the third one, guys. Can we say how about 25,000? Now, please make some cap gains for me. $2,000. All right, let's try. Can you tell me, just feed me the figures? What are the figures? First, 10,000, 5,000, Gurivanshu, 8,000, 13,000, and it's going to be 2,000. Clear? Okay. Can we try one last question? I'll give everyone the question and then please post me the question again. I'll answer everything. Don't worry. Let's try one by one. Because if you keep on sending me the message, you will not do the conceptually, you will not understand it. I'll take up all the questions. Don't worry in that case. Can you tell me how much is going to be the cap gains? That's what I'm saying, Arjun. Let's do this. I'll do every question. Post me that. I'll tell you. This is going to be 10,000. This is going to be 5,000. This is going to be 8,000, 13,000, 8,000, 21,000. How much it is going to be? 12,000. Absolutely. Guys, I have not even started. I'll take so many hours just to discuss that. Hear me out. I'll answer every single thing. Okay, don't worry. Let's try one quick question, because conceptually it's just like question wise you should be able to do it. Let's try it. One last question. Current year's earnings and profit 5,000. Accumulated earnings and profits, let's keep it 5,000. Basis, let's keep it also 5,000. Okay. Distribution, guys. Scenario 1, 2, 3, 4, 5. 15,000, 20,000, 30,000, 35,000, 100,000. Please tell me capital gain in all the scenarios. Anyone who has not understood how to do it, please tell me. Guys, give me all in one go, please. Else we cannot match it. Anyone who has not understood how to do it, please ask me first. I'll do it from the basic, from the zero, guys. If anyone who has not understood how to do it, please, this is the time. Last is 100,000. 100,000. All the 3, 5. Sure, Arjun. That's the law, but still I'll do it. Okay, current year, accumulated, return of basis, and the capital gains. Okay, 5, 5, 5, 0. 5, 5, 5, 5. 5, 5, 5. How much? 15, 15. Correct me if my figures are wrong. 5, 5, 5, 15, 20. 5, 5, 5. 85. Everyone is getting this? 0, 5, 15, 20, 85. Okay, can we just quickly look into the book? Okay. No, I think let's first do more. In this case, what is the waterfall we are saying? The waterfall we are saying we are saying this is current year earnings and profit. It is accumulated earnings and profits. It is going to be return of basis, and it is going to be capital gains. Capital gains, this is going to be taxable. Obviously, the capital gain is going to be taxable. This is all we are talking about the shareholder. We are talking about the shareholder. It is going to be taxable in that case, right? This, when you are reducing your basis, is it a taxable event for you? When you're reducing your basis, is it a taxable event for you? No, it's a non-taxable event, right? When you're reducing your basis, it's a non-taxable event. Absolutely. These two, whatever the value here comes, this is going to be your dividend. I have not told you what is going to be the dividend, but this is going to be the dividend. So if I ask you in all the 5 scenarios, how much it is going to be the dividend for the shareholder, all the 5 scenarios, in all the scenarios? Correct. It is going to be the dividend in that case. Okay. Can you tell me in this scenario, how much is going to be the dividend? It is going to be this dividend. Absolutely. No, Virat, this is going to be the dividend. Current accumulated and the accumulated is going to be the dividend in this case. Okay, let's see it from the book. No. Okay, I tell you why there is a confusion. You are confusing, guys. No, it has been distributed. You're mixing things, right? 2-3 things you are mixing. Hear me out, 5 minutes, you'll understand. First, you are mixing it, whether are you selling it or not. We are not selling. We are not at all selling. So there is no question of the capital loss, first of all. Okay. Is that point clear, that there is not going to be any capital loss? Is that point clear? There is not going to be a capital loss because you're not selling it, right? Question comes, why we are having the capital gains? We are having the capital gains, reason being you have reducing the basis. You have completely reduced your basis, and a company still keep on giving you something. When the company is keep on giving you something, we are not calling that as a dividend. When your reduction of the basis is there, when the company does not have any profits, in that case we are saying this is going to be your capital gains. We are saying this is capital gains, and something what we have discussed it earlier also. When you have recovered your basis, anything on the top of it is going to be capital gains. Is both the points clear? No, it's not. That's what I'm saying. How? You're thinking again from the Indian perspective, Arjun. That's what I'm saying. We need to unlearn and relearn. Again, you're thinking from the Indian perspective. It's not. There would be so many things we'll do in this case when there is going to be a capital gains, even if there is nothing in that case. Okay, sure. Purvi, first I'll repeat, guys, what I'm saying, then I'll take up the question. So Purvi, what I'm saying is, in this case, is the shareholder making sale? Is the shareholder making any sale? No. Company is giving you the distribution, and we are treating this distribution. I have not done anything. It's just the company is treating the shareholder, how the shareholder is going to treat that distribution itself. In this case, we are following this waterfall. What is this? See, first of all, how much the profits company is having. See how much the accumulated profits the company. Then you reduce your basis. Then anything on the top of it is going to be capital gains. So there is not going to be any capital loss. Capital loss happens when you're actually selling it. Is that point clear? So this is not going to be capital loss. Now the question comes. That why are we having the capital gains? Capital gains is going to be because they are reducing your basis. They are continuously reducing your basis, and once the basis becomes zero, anything on the top of it is going to be capital gains in that case. It may be realized capital or loss on sale. No, it is, again, we are not making a sale, Rishikesh. Which gain? That gain? Yes, once you sell, then you will have a capital gains again on that case. Again, guys, why are we getting so much mixed up in that case? Because we just so much conditioned by selling it because we are so much conditioned by thinking there are the 5 heads, which is salary, which is house property, which is other sources, which is PGBP, and this is cap gains. So cap gains will happen like that. No, it won't happen like that. Here also, if the company is giving that, we're not taxing like an Indian system. That's why I'm saying we have to really unlearn it and then do it, right? So in this case, whenever the company is giving, yes. So Purvi, whenever your basis is over, anything on the top of it, it is going to be capital gains. Do not think the capital gain will happen whenever you are selling it. No, it does not happen. It happens only in India, not in the US circuit. Is that point? Okay, Purvi, is that okay? But why are we considering now? Can't we say this as a return on our investment? Okay, how would you tax the return on investment? Okay, Arjun, I got your point, but how would you tax the return on investment? So company keeps on giving you the distribution. Okay, let's see, if the company keeps on giving you the distribution, right? If the company keeps on giving you the distribution, you're not going to tax that thing. Is that Arjun? Okay, guys, who has understood, can you just please read? I don't know which page number is that. Page number 45 of page number 45, page number 45, R4, module 7. Okay, everyone who has understood, or else we'll keep on giving time to this. I'll answer everything, guys. Everyone who has understood, guys, please keep moving this. Don't read the netting procedure. Just read this. And this also, this example, order of distribution allocation. I think it should be the same, Urja. These are the only two things. Just read. Ignore general netting rules. Ignore the order of distribution in that case. Okay, I'll answer the point. I will tax gain only at the time of sale. How can something be taxed till I sell it? That's I'm saying, Arjun, you are thinking again from the Indian perspective. It's not, it is not going to be taxed in the times when we are selling it. It is getting taxed even when the government is giving, even if the company is giving in that case. Are we revaluing the basis on the distribution? No, Venkatesh, we are not going to change the basis. Basis will remain the same at whatever the price you are purchasing in that case. What if in the year one distribution I recovered the basis? What would be the calculation? Good point, Veer. Very good question. Out of this, you have asked a very good question. So, guys, I think this is a good question that everyone should hear. Veer is saying that the company is making the distribution in the year 2019, and the company has given the distribution. Let's say here earnings and profit is 0. And the distribution, it is giving 15,000, and the shareholder is having basis, let's say 18,000. No, let's say 12,000. Can you tell me what is going to be the first 1, 2, 3, 4? Let's call it 1, 2, 3, 4, guys. Easier to say us. Accumulated current years, accumulated return of basis, and cap gains. How much is going to be current year? Current year is 0 here. So this is going to be 0. How much is accumulated? This is also 0. This is also going to, how much is going to be the return of basis? $12,000. Absolutely. How much is going to be the cap gains? 3,000. Is everyone clear with this waterfall? 1, 2, 3, 4. This is clear? Okay. So the question, okay, guys, please hear me out when we are doing it, else we'll keep on repeating things. What I'm saying is the company is making the distribution of 15,000. That's the earnings and profit. Current year is 0 and accumulated is 0. What is going to be the waterfall? 1, 2, 3, 4. Since it is 0 current year, so we are taking it 0. This is accumulated 0. This is 0. Then we have the return of basis, which is 12,000, and the cap gains, which is 3,000. Simple waterfall 1, 2, 3, 4. Okay. So the point, I missed. Who asked me this question? Venkatesh, I think you asked me. Yes, Veer, you asked me this. Veer is asking, what about the next year? What about in the year 2020? The company is giving the distribution of, let's say, $10,000. Again, let's say it is a really terrible company. Earnings and profit is 0 for both current year and the accumulated. In that case, what is going to be the value of 1, 2, 3, 4? 1, 2, 3, 4. What should be the value? Next year, 2020, I'm talking about. Very good, Sapna. It is going to be 0, 0, 0, 10. It is going to be all capital gains in that case. Is that point clear? It's a good point. you will find a lot of relevance of it that when you're going to the S corporation. Please read the question. Okay, why not? Company can distribute. There is no, again, you're thinking from the Indian perspective. Why not? It can. Why not? Is there any law? Are you aware that they cannot distribute? Companies distribute the dividends like in India, they almost every year. Okay. Again, guys, I tell you one more problem in this case. When you're thinking, when I'm telling you the company, you're thinking a big company. You're thinking more like a Tesla. I, in fact, give you the wrong example, Tesla, Amazon, Berkshire Hathaway. No. C corporation could be just like there is only one company. I am the owner of the company and I am only one person in that case. So that means I am the sole owner in that case. So if I need the funds, I'm getting the distribution in that case. There is no problem in that case. So in that case, I totally get what you're thinking. You're thinking it's such a big company, crores and crores of the investors. No, it could be there is only one. I am the only shareholder. I am the shareholder. My family members are the shareholders, and I'm getting the distribution. Okay. Yeah, that's why I'm saying, Arjun, are you aware of any law which says the zero distribution company cannot distribute? It can. It can. Distribution, that's why I'm saying do not link distribution with the dividend. Do not link the distribution with the dividend. That's the first thing I started with. Do not confuse the dividend with the dividend. Do not confuse the distribution with the dividend. That's why I said if the company is having the current year's earnings and profit, company is having the accumulated earnings and profit, that is going to be the dividend. That is going to be taxable dividend in that case. So Lalit, as I said, it could be practically it could be your own company. It could be very closely held company. Loans fund could be coming from any loan fund could be coming that you have put the money in the form of equity, and as and when you're needing the money, you're taking the money back in that case. So it could happen any ways. If distribution is 10,000, in the earlier question, Ashish. No, cap gain is not going to be, because Ashish, in the previous question, we have recovered our basis, and we have recovered our basis. In that case, anything on the top of it is going to be capital gains. No. Again, Arjun, you're thinking if it is, why are you assuming that if it is no profit, the company is not going to distribute? It is possible. Why not? That basis has been recovered, Ashish. If you see in the 2019, the basis has been recovered. If the investee equity is a return basis, should be some amount. Correct. Year is 2020. In the year 2020, it is going to be 00010. Is it clear, guys? Shall I move? Okay. We have to refer the previous year computation of the current year estimates. No, you will account for your basis. In that case, every time you should be aware that what is my basis. You should be aware of what is my basis every time. This is going to be my basis in that case. This means that every year, if my basis is getting covered, then I have to pay the tax on this. Yes. Every year basis is not going to be covered. Your basis is covered in the 1 year, then it is covered. So there is no question about every year. Once your basis becomes 0, it is going to be 0, isn't it? Okay, I think I'll move now. We are giving so much time for this. It's cap gains is going to be taxed. Yes, every time it is going to be cap gains in that case. It is very investor friendly. I would say it's way friendly than Indian tax itself. You are just thinking way too much in that case. You have not even seen the tax in that case. It is very investor friendly. It is very tax friendly. When you read the Indian, when you read the individual shareholder, you will realize so many things is very logical in US taxation. Our tax is sorry to say it's very terrible. It's just to loot the investors. But if you see, it's a way much better there. It's not even the 2 hours of the class. You'll see it many hours. You'll see it. It's way much advanced. It's way much better. Okay, guys, I'll move now. We are giving so much time to this. Waterfall, guys. Waterfall, as I discussed, is going to be current year's earnings and profit. It is going to be accumulated earnings and profits. It is going to be return of basis. It is going to be capital gains. That's the basic waterfall we are going to follow it. We'll not repeat again the names. Let's start calling it 1, 2, 3, 4. It's easier for us to do it in that case, that it is going to be 1, 2, 3, 4 in that case. Okay, are we okay with the calculation of the 1, 2, 3, 4? Do you need to do 1 or 2 more questions on that case? Are we good? We are good. Okay, let's try 1 or 2 more questions, MCQs on that case. Which of the following is correct for the purpose when the distribution of the company is going to be taxable as a dividend? Absolutely, current year or the accumulated earnings and profit are going to be reported as a dividend. Correct. Taxable income may be substituted for the current year. Taxable income may be substituted for the current year while reporting the dividends. Maybe substitute for the current year's earnings profit when reporting dividends. No, that's incorrect. I don't know what is the meaning of that. Taxable income may be substituted for the current year's earnings and profits when reporting the dividends. No, it is not. So taxable income is, as per IRS, reported as per the current year's earnings profit, which is pretty much the current year's earnings and profits itself. So that's incorrect. Okay, guys, when we say dividend is called the ordinary dividend only. It's the same thing. It is going to be taxed like an ordinary income only. Common kinds of the distribution by a company to shareholders are going to be ordinary dividends, correct? Cap gain distribution, yes. Non-taxable distribution, is it there? We have done this. Correct. Return of basis, very good. Correct. All of the following are correct. Is that okay, Bobby? It is, if you look, this is going to be 1 and 2, rather I should speak like that. This is going to be 4, this is going to be 3. So all 1, 2, 3, 4 are there. So that's why P is going to be there. We cannot do this. We can do this. We cannot do this right now. We'll do it after 15 minutes. Non-taxable is the, yes, return of basis. So a distribution from the C corporation to a shareholders cannot be treated by the shareholder which of the following classifications. I got capital loss. Yes, it cannot be capital loss. Ordinary income is going to be 1, 2. It's going to be 3. It's going to be 4. So B is the answer. Okay, guys, I'm moving. I think, are we good? We can move this now. I'm taking the concept little a notch above. As I said, this is the toughest portion of the entire reg. So I know it is going to be a little problematic when you're doing it for the first time. Absolutely fine. But let's address the elephant better. So I'm talking about, we discussed about the basic waterfall you're going to follow is the 1, 2, 3, 4. Life is very good when the current years, right? When the current year's earnings and profits and the accumulated earnings and profits. What we have done, we have said either they are 0 or they are positive. So that means, let's say if this is positive, this is positive. That means the current year's earnings and profit, accumulated earnings and profit. When I say current year's earnings and profit and the accumulated earnings and profit, are we looking for the E&P of the shareholder? E&P, no. We are looking for the E&P of the company. Okay, it's going to be for the company only. Okay, I have not explained anything. I'm just saying a current year's earnings and profit, is it for the company or is it for this? It is for the company only. Okay, what is the waterfall you are going to follow in this? If both are positive, would you follow 1, 2, 3, 4 in this? Yes, the basic waterfall here is going to be 1, 2, 3, 4. Absolutely. Okay, if both are negative, what waterfall would you follow? Are you not going to follow 1, 2, 3, 4? No, because you do not have profits. When you do not have it, what waterfall are you going to follow? You are going to follow 3 and 4 in that case. Up till here, any confusion, guys? No, shall I move? Okay, now let's increase the stake. Let's see, this is positive, this is negative. Up till here, for the first two scenario, we were not doing, are we doing any netting of that? No. We are doing any netting? No, we are not doing any here. Are we going to do any netting of that? When I say netting, hear me out. What do I mean? This is $100. This is, let's say, 150. That means, should I do minus 50? That means adjust this. Answer is no. No, you cannot tell this. I'm telling you because that's, you're not aware of the law. So no adjustment is going to happen in this case. Is that point clear? When I say no netting off, right? So in case there is no netting off is happening, what should be the waterfall? One, because why there is no 2? No, why there is no 2, guys? Because there is a loss. We have to ignore in that case, Virat. Is that point clear? I think some people will have a doubt. Please shoot if you have the question. No, good. Okay, wonderful. Now the last scenario, which is going to be a little tricky. That means this is negative, this is positive. This is negative, this is positive. We are going to net it off. We will net it off. I explain the meaning of net it off. That means this is minus 100 and this is plus 150. You will net it off. After netting off, two things could happen. Maybe the result is positive. Maybe the result is going to be positive. Maybe the result is going to be negative. Why positive? Positive is going to be 200. This is going to be 100. So what is the result? Positive 100. Or the other way around, this is going to be 50. In this case, it is going to be minus 50. Is that point clear, guys? How negative, how positive? Okay. So it could be anything in this case. It could be positive. it could be negative. I should rather write like this. So here it is going to be positive. Here it is going to be negative in that case. If it is positive, guys, right? If it is positive in that case, the sequence here is going to, okay, first of all, think, if it is negative, what should be the waterfall? If it is negative, net is also negative, what should be the waterfall? Brilliant. It is going to be 3 and 4. It is going to be 3 and 4 in this case. But if it is negative, if it is positive, in this case, it is going to be net 3 and 4. Is it all clear? I think you can make a note of this, guys. It's going to be much easier. HY not 2. I had no idea. Because here we are talking about the net. We have done the net here. That's why. Whenever you're done noting this, guys. Correct, Rishikesh. I didn't get your point, Hemant. Where are you saying? What are you saying? In case of a positive, right? Here you're saying it. So you are saying it directly. Why are we not doing it 2, 3, 4? Is that what you're asking? Okay. So why we are doing in this case, generally we are saying distribution is happening. When distribution is happening? Distribution is happening in the current year or in the previous year? When is distribution happening, Arjun, Hemant? In the current year, correct? It is happening in the current year. So ideally, when you're distributing in the current year, if you are having a profit, life is very good. If you are having profit, you are distributing it, it's good. You're distributing, it's absolutely good. So that's why we are doing here 1, 3, 4. But in case you are distributing here, again, this is current year, but here you do not have sufficient profits in that case. Hence, first see your position. First see your position after adjusting the accumulated, whether you have sufficient profits or not. In case not, then you will follow 3 and 4. But yes, after that you have, in that case, you will follow net 2, net 3, 4. Is that clear, guys? Can we try one question if all good? Net means, guys, please make it quickly, else we are waiting too much for this. Net means, for example, positive, right? So this is minus 100. This is 180. So this is 80. That's what I meant. So this is going to be 80, Arjun. Okay. Arjun, 80 is not going to apply on step 3 and 4. 80 is going to apply on the distribution. Are we applying anything on the 3 and 4? No, we are applying distribution. From this, things are getting reduced in that case. Now the balance is net negative, so nothing would be adjusted from ENP. Absolutely, Hemant. Correct, Ashish, absolutely. Okay, guys, let's try one question. Sure, Arjun, I was doing that only. Distribution is 60,000. Basis is going to be 15,000. Current years, and this is accumulated earnings and profit. Okay. First, this is 10. This is 10. This is 10 and 10. Shall I net it off? Nope. What is going to be 1, 2, 3, 4? Can you please tell me? Ten, 10, 15, 25. Anyone facing any problem? No? Okay. Let's try second. Let's say this is minus 20. This is minus 40. Shall I net it off? No. What is going to be the 1, 2, 3, 4? Zero, 0, 15, 45. Everyone getting the same? Any problem, guys? Any problem, guys, in this? Third. This is 0. This is okay. Hopefully not. You will not get this problem. 0 and okay, let's not say 0. This is 10. 10 and minus 40. Would you net it off? No. Tell me what is going to be 1, 2, 3, 4. It's going to be 10, 0, 15, 35. Any question up till here, guys? Shall we move? Okay. Let's see. Fourth scenario. It is minus 20 and 10. Shall I net it off now? Yes. Okay. Tell me what is going to be the sequence. Tell me the values. Zero, 0, 15, 45. Perfect. Let's try the last one. Minus 20, 40. Net it off. Okay. What is going to be the waterfall? Twenty, 15, 25. Where 0, Aditya? Are you asking about this? Guys, all good? Shall I move? Okay. Let's try one last question on this. Is it not 0, 20? It's a net, Rishikesh. It's the one and all the same thing. Even if you take 0, 20 or 20, 0, it's all the same thing. Because eventually it is going to be, if I talk to you, if I ask you guys, if I ask you here, How much is going to be taxable dividend? Correct. It does not matter. It does not matter whether current or accumulated. It does not matter in that case. Clear? So it would be the same. Okay, let's try one question. Correct, Hemant. Distribution is going to be 10,000. Let's keep it simple. Basis is going to be 0. Current years and accumulated earnings and profit. It is 10, 10. This is minus 20, minus 40. It is 10, minus 40. It is minus 20, 10. It is minus 20, minus 40. Yes, can you please tell me, it's not possible for you to tell me everything in this case. Okay, let's just do one by one. Can you just tell me in the first, what is going to be the waterfall? In the 1, 2, 3, 4, what is the value? Ten, 0, 0, 0. What about in second? Okay, 0, 0, 0, 10. Correct? Okay. Third, 10, 0, 0, 0. Correct. Fourth, it's going to be 0. It's going to be 0. It's going to be 0 and 10. What about last? Zero, 0, 0, 1, 0. Are we good? Yeah. Okay. Let's quickly read it from the book. Now it will make more sense when you understand it better. Read this general netting rules in this case. General netting rules in that case. Arjun, you're just thinking from the Indian perspective, that's we are not able to understand the logic. You first need to unlearn that thing. Guys, please read it. Up till here, I'll discuss with Ashish his point. So Ashish, I think you're talking about this scenario. Is that what you're asking, Ashish? So how much is the, would you do the net of? Shall you do net of? Yes, you are doing to net of. How much is the net of? Net is minus 10. Correct. So that means 0, 0, 0, and 10. Because base is also 0. Everything is 0 here, and that's why it's 10. Not clear, Ashish? Point is correct, Hemant, for you, but the point is that's the third point in the waterfall. It is not directly what you're saying is absolutely correct. If the company does not have sufficient profit, that means the company does not have the current year's earnings and profit, then what you're saying is correct. Correct. It is going to be taxed. Everything, guys. For example, if you look into the waterfall also, if I talk about in the waterfall 1, 2, 3, 4, what are the things which are taxable? Out of 1, 2, 3, 4, what are taxable? 4 is taxable, 1, 2 is taxable. Correct. So these are the things which are taxable. Is it clear? In whose hands is it getting taxable? Shareholder only. I don't know why there is a confusion. It is shareholder only. It is shareholder only. This is non-taxable. Okay. Guys, whenever you're done reading, let me know. Yes, Arjun, that's how I started. Distribute. That's the first thing I started with the point. Distribution is not at all equals to dividend. No, Hemant, how could you do the tax planning? Tell me. Page number 45. But dividend is going to be taxable in that case. It's just one and all the same thing. Dividend would be taxable. Okay, guys, quickly read that. What is the preferred also and the common also, very basic point. That's the point, Rajkumar. Whenever the distribution happens, the company tells, again, I'm telling you, Rajkumar, you're thinking more from the wildly head company. We're talking about the more something where you are the owner of the company, very closely knit company we're talking about, right? Generally, when the company is telling this is the distribution, it informs its shareholder. The page number, Ashish, I don't know whether I told you or not, it's page number 46. Is that point clear, Hemant? Tax planning cannot be done because in that case, it is going to be taxed as a dividend only, which is much higher rate than the cap gains. So that's even the worst case. We're done with this. Okay. Last in this sequence, guys. Can you just allow me a minute? I'm just okay, guys. During the entire regulation, everything in the regulation is very much interconnected. So I'll keep on telling you where to mark in which section of it. Okay, just allow me a minute. I'm just going to tell you. You need to mark some portion from your, because the same thing we are going to see again. Understand? We're doing the corporate taxation, but again, I'm telling you everything about the shareholder perspective also. So ditto thing you're going to read when you're doing the individual taxation. So let's mark that portion so that you do not have to do the double point in that case. Can you tell me, it should be in the reg 1 income side of it. Can you get a sense which page number is that? No, it should not be in R2, it should be in R1 income side. Should be here 29. You talk to VGLD team? R1 Himanshu, thank you so much. Oh, you guys have not received your book. That's bad. Guys, try to get your book a lot of ASAP, because I will keep on asking you to make the notes, and it was not that much necessary in the others, but it is extremely important for you to do in the reg, because I'll keep on asking, giving you the referring in that case. And it's going to be a problem if we are not marking this. For example, dividend, what we have done there is exactly ditto same. So do one thing, go back here, go back on this page number, defined here, give an arrow like that. That means there is a sum linking over there. What is the page number? Page number is page number 17. So give a referencing page number 17. Is it R1? Yes, it's R1. Go back to on page numbers. Which page number is this? Page number 45, R4. Give a referencing here, page number 45. Page number 45, R4. Guys, start making the links like that. Only then it's going to be much more easier for you. Everyone done? Make it both ways. There, give the references of R4 and this, so that when you're coming here, you'll know, okay, I have done it, right? It's going to be easier in this case. So this is going to be same thing, corporate dividend, taxable dividend, no earnings, non-taxable, reduce the basis. Everything is going to be the same in that case. Ditto, everything will remain the same. We are going to discuss this only. Page number 17 in R1 and page number 45 in R4. Yeah, I've written 17 only. Are we done? Okay. Up till here, whatever we are talking about, the company is giving you the distribution, the corporate is giving you the distributions. We talk about maybe the once a distribution. I'm not telling that the company is continuously giving you on a regular basis. The company is giving the distribution. I'm just saying the company is giving the distribution. So pretty much I've been talking about the annual distribution. I'm just talking about the annual distribution. What about the company is giving you the multiple distribution? So when the company is giving the multiple distributions, when the company is giving the multiple distribution during the year, in that case, understand what is the problem. Problem is 1, 2, 3, 4. But how will you do? You will keep on doing every time 1, 2, 3, 4. In this case, we are going to adjust current year's earnings and profit. We are going to adjust proportionately. Accumulated earnings and profit, we are going to adjust chronologically. Just make a note of that. I'll discuss with you. Let me know once you're done. Okay, let's try one question on this. Let's say current year's earnings and profit. Sure, Virat. Sure, Ashish, let's do this. I'll go back that again. Current year's earnings and profit is 4,000. So let's see, 2000 only. Current year's earnings and profit is 2000. It would be just a chronology. After that, everything is going to be the same chronology itself. Okay, you'll understand, Preeti, with this. Let's do this example. Current year's earnings and profit is this. Accumulated earnings and profit is going to be 4,000. Basis is 1,000. And distribution is $10,000. Can you just tell me 1, 2, 3, 4 first? What is going to be the 1, 2, 3, 4? Forget about the chronology, forget about the proportionately. Whatever we have done, the waterfall, tell me that only. As per that only, what is the 1, 2, 3, 4 is going to be that? Yes, please tell me 1, 2, 3, 4 in this case. What is going to be the value of 1, 2, 3, 4? Okay, value of the 1, 2, 4 is going to be 2413. Nice. Okay, so 2 is going to be this, 4 is going to be this, 1 is going to be this, anything on the top of it is going to be 3000. Perfect. Now, this is good. We have done up till this only. But let's say in this question, the distribution which 10,000 is happening, it is happening quarterly. That means equal distribution is happening per quarter. Equal distribution is happening per quarter. So can you tell me how much it is going to be in per quarter? So if I just plot it here, quarter, 2,500, Q1, Q2, Q3, Q4, and total. So I'm writing here the distribution, 2,500. And this is going to be 10,000. What is in the distribution? What is the first thing we reduced? In the distribution, what is the first thing you reduce? In the waterfall, what is the first thing? Current years, absolutely. How do you distribute the current year? Proportionately, absolutely. So how much should I reduce? Correct, 500. Let's see, 500, 500, 500, and I believe it is 2000 matching here. So this is going to be 2000, 2000, 2000, 2000, and 8000. Okay. Then we will have it. No, again, we are doing for the shareholder only. Then we have the accumulated E&P. How are you going to accumulate earnings and profit? How do you adjust? Is it proportionately, Himanshu? No, it's chronologically. That means first, how many are there? How many, what is the value for the accumulated? 4,000. So that means first 2,000 is going to go here. So this is 0. Then 2,000 is going to go here. Should I write anything here? No, it's exhausted. Nothing can be done. Nil, nil. This is going to be 4,000. This is going to be 2,000, 2,000, and 4,000. Clear? What is the basis? What is the basis? 1,000. So this is going to be nil, nil, 1,000, nil, 1,000, and anything on the top of it is going to be cap gains. 3,000 cap gains. So Shakil, in this case, it's just the current year which is going to be proportionate. Rest everything is going to be chronologically only. So I think Shakil's pointed why we're not proportioning that is that everything is going to be chronologically only. You guys can make a note of it, then we can try one question quickly. Except, so you can say other way around, current year is going to be proportionately, rest everything is going to be the same chronologically. Shall we move? If you want to copy, you can do that. Sure, Shakil. So Hemant, the waterfall is pretty much the same only 1, 2, 3, 4. It's just like, why are we doing this? We are saying, we are assuming, see, you need to understand current year earnings and profits, right? We are continuously keep on giving the dividend. We are continuously keep on giving the distribution. So we are assuming that the company is earning pretty much the same earnings in that case. The company is earning the earnings pretty much universal in that case, because we don't have the data that how much is the earning up to which period in that case. The data is for the full period. So we are assuming in that case with this equation that it is the proportionate profit you have earned throughout each quarter. That's why proportionate. Yes, sir. If current year balance is tax, I didn't get your one. If the current year balance, no. Okay, so Preeti, what you're saying is, okay, understood. So you are saying, Preeti, this is PBT. You are saying this is PBT. No, this is not PBT. This is after tax only. Year end, a month. So this figure, which is current year, this figure for the current year is just like what we have done Preeti earlier also. It's just like this is also after tax only. Why can't we add all the interim distribution and do the annual calculation? We can do that also, but sometimes in the question they will ask you that for this quarter, let's say if they ask you how much is going to be allocation for the quarter 3, in that case you cannot do that. They will ask you specifically how much is from the quarter 3 going to accumulated earnings, and the current year in that case will not get it. Okay, Hemant? Okay, guys, if you have noted, we can move. Okay, let's try one question on this. You tell me, you guys are aware now pretty much. You tell me how much is going to be the dividend. Correct? It's going to be 6,000. That modality will remain the same. That modality of the current year accumulated will remain the same only. No change in that case. Current year's earnings and profit is going to be 15,000. Accumulated earnings and profit is going to be 10,000. Basis is going to be 2,000. Distribution is going to be 7.5 thousand per quarter. Can you tell me cap gains in each quarter? Q1, Q2, Q3, Q4. I would suggest definitely make this table. It's going to be very easy for you to follow this. No, I think Hemant, your figure is wrong. Arjun, I think your figure is also wrong. Try it again, Hemant. Basic logic, Hemant, Arjun, eventually it is going to be the same here, right? It's going to be this. It is going to be 30,000. It will remain the same. It's just a cross check point for you. It's okay. Got it, Hemant? Got the mistake? Okay. No problem. Not at all. No problem. Any question, guys? Is that all good? Shall we move? Okay. Last question. Pinky promise. This is the last question. Your answer is not coming, Ashish. What value are you getting? Okay. And nothing. just I'm saying this is the last question. I'm going to do it. 3,000. Okay. Let's do it quickly for Ashish. Let's quickly tell me the figures, guys. Q1, Q2, Q3, Q4. I'd rather make it like that. Q1, Q2, Q3, Q4. Okay, forget this. How much is the distribution? 7.5, right? 7,500, 7,500, 7,500. So Ashish, can you tell me how much is the current year you're taking it? Current year, how much you're taking? It's, what are you taking, Ashish, each quarter? 3,750? No, every quarter it is going to be 3,750, right? Current year, 3,750 in this case, right? So this is going to be, I think, 3,750 only, 3,750 only. Okay. Accumulated, Ashish, what are you taking? It's 10,000. So it's going to be chronologically. First, I'm going to exhaust this. Correct, guys? Correct me where I'm wrong. I'm going to finish this. Is it correct? My figures are correct. Wonderful. 3,750, 3,750. What is this? 7,500. So 2,500 is left. Thank you, Sapna. 25 is left. This is nothing. So it is going to be 1,250. This is going to be 3,750. Is it same, Ashish, up till here for you? From this, Ashish, you are going to reduce. Your reduction of the base is, which is going to be 2,000, which is directly going to reduce from this 1,250 and 750. Absolutely, this is 0. This is going to be 3,000. Correct, Ashish? Okay. Let's try the last question. Current year is going to be 4,000. Accumulated is going to be 4,000. This is, let's keep it simple. This is also 4,000. Distribution, you are doing it Q1, Q2, Q3, Q4. How you're doing it? You're doing 8,000, 8,000, 2,000, 2,000. Can you please tell me cap gain each quarter? Sure. Let people copy this. I'll go back again. Take this, Ashish, if you want to screenshot. Done, Ashish? Yes, basis is also 4,000, Arjun. 16,000, 20,000, 20,000 and 12,000. No, that could not be Raj. Okay, everyone is getting 0611. It looks like 911. Let's try. Tell me the figures. Q1, Q2, Q3, Q4, and there you got the total. No, Virat, the figure looks wrong because the distribution should be, the cap gain should be 8,000 only. Because if you do on the total wise also, it is 20,000. This is 12,000. So the cap gain automatically is going to be 8,000. But your total is coming 10,000. So there's some mistake. How much is the cut per quarter? It is going to be 88. It's going to be 8822. 8,000, 8,000, 2,000, 2,000. So total is going to be 20,000. Can you please tell me current year's profit? How much should I take? 1,000. It's 4,000. This is going to be 4,000. Is it clear, guys? Up till here, everyone is getting the same. Yeah. No problem, Virat. Everyone is wrong. Correct. It's going to be proportionately, but proportionately is not the period wise. Proportionately is going to be amount wise. Amount of distribution. Fortunately, in all our cases, the value which is coming is equal. That's why it is coming equal, right? In that case, it was proportionate only. Okay, it's proportionate, but it is proportionate amount wise, not the period wise. Can you please try? Try once. You didn't ask even Arjun. I said proportionately. Yes, it is to be amount wise. It's okay. All the mistakes doing here is better than exams. Now tell me, guys, what is the cap gain which is coming up? This looks correct, Rishikesh. So 0, 4,800, 1,600, 1,600. I don't have the solution. Okay, Arjun, sorry. Don't feel bad. It is going to be 0, 4860. Correct. Guys, everyone is getting this? Okay, wonderful. Are we good, guys? Shall we do one more question? Whatever you guys say. Sure, Jen. Let's do it for this. Let's quickly do this. Can you guys please tell me the current year's earnings and profit now quickly? I think it is going to be little fractional figures. Just the figures only. So it is going to be how much? 4,000 into 8 divided by 20. So this is going to be Rishikesh, thank you. 1600, 1600, 400 and 400. From this, we are going to reduce the earnings and profits. Can you tell me here, what is the accumulated earnings and profits? 4,000. Okay, it's just 4,000 only, I see. Accumulated earnings and profit is only 4,000. But how come it is telling them? Okay, then the basis will come, I see. Nil, nil, nil. Okay. Then the basis, tell me how much is going to be the basis? I see, this is 2,400, which is 1,600. I see. Balance is going to be the cap gains, this. Is this clear, guys, everyone? Jan, is that okay? Anytime. Can we do a few MCQs? Or do you want to take a break? Okay, let's take a break. We have 7:25. Few 2-3 MCQs. Let's try on this. Then we can break. Just 2-3 MCQs. That's all. Okay. I will do one question only, which I left in between. Now you can attempt this. Then we'll stop for a break. Do slowly. Read the question carefully. Read the question carefully. Do it slowly. See what the question is asking. Lalit, try again. Read the question again. You'll do this, guys, but just read the question. What is the question asking? Okay, let's see. ABC Corporation has 2 cash distributions. Guys, you're not reading the question. That's why the wrong answers are coming. You're not reading the question. Read the question. ABC Corporation paid the 2 distributions. First was, and second distribution. First was 42,000. Correct? 42,000. And second was 33,000. Okay, good. Accumulated earnings and profit was 10,000. Current year is 30,000. How much should I reduce? In the first, I should reduce current year, right? How much the current year I should reduce? equal 1515? No, absolutely. Is the amount is going to be this. So can you just tell me what is the value in the proportionate value? Yeah, what is the ratio which is coming? 16,800 and 13,200. Okay. Then from this, so automatically current year is this. So this is out. This is out. Okay. We are looking first distribution. This first distribution be allocated in this. Now second is going to be accumulated in this case, which is going to be 200, 26, 25, right? 25 to 100. This will go here. This is going to be the answer. Is that point clear, guys? Sorry, my bad. How will the first is accumulated in this case? No, let's see. Correct me the figures. Is it 16,800 and this is correct? 16,800 and 3,200. Okay, accumulated is only 10,000. I see. So yes, next is going to be accumulated. We are looking this. We are looking this. So this is going to be 16,800 and the 10,000. Correct. Yes, sir. This is the answer. Okay, I think we can stop here, guys. We have 7:25 and I'll see you guys. Sure. And I'll see you guys at 7:45. Okay. Thank you. Accumulated earnings and profit is 60,000. Earnings and profit for the year ending is going to be 80,000. Cash distribution to the individual shareholder is going to be 180 in this case. So 140 is going to be distribution as a dividend income. What will happen with the rest of the 40,000? So 180 minus 140, it is going to be either 3 or 4. That means reduction of the basis, and absolutely correct, capital gains. Try this one. No, I'm just saying it. I mean, obviously I'm not asking you the value. I'm just saying what is the waterfall, what will happen next. ABC company paid the 2 cash distribution. I'm glad everyone is getting the same answer. 2 cash distribution 4233, accumulated is 80,000, current year is going to be 30,000. The first allocation be allocated in the current year's accumulated, correct, 16,800 and 25,200. Is anyone not getting this? Everyone is getting this? Okay. Sure, Ashish. So guys, can we try quickly for Ashish? 2 distributions you are doing in this case. First is 42 and this is going to be 33. Current year is going to be 30,000. So what is going to be the ratio, Ashish? Current year's earnings and profit? 16,000, 16.8, 13.8 in this case. how much is going to be, so that means this is not the answer, this is not the answer, this is not the answer. Accumulated earnings and profits, how much it is going to be? It is going to be 25.2, is it? Yeah. We are just consider with this, how will the first distribution is going to allocated in the current year and the accumulated, this is going to be this. We're looking just the first distribution, Ashish. Is it clear? How are you allocating? You need to allocate on the basis of the distribution amount. Okay. No, leave this question. Try this one. It's the same, but it's the second distribution. Which pick using solution? Oh, so Lalit, you're saying question is covered with my picture. Is that what you're saying? Okay. I cannot adjust my screen. This is going to be, I can't do it from my end, Rishikesh. Let me know if anything is not clear, I'll repeat the question. Correct. It's going to be A in this case. Okay, guys, I think I can move if all good. Okay. Just make a note. Basic is just for clarificatory in nature only. Return of capital. First of all, it is return of capital. It is not return on capital. This is not ROC. This is return of capital. Return of capital, non-taxable distribution, non-taxable distribution, reduction of capital, it all of them has similar implications. So that means it's just the same meaning, but in your question they would give the different language, in that case different nomenclature. All have similar implications. That is, it is going to be non-taxable. Whenever you're done. Yes, Shakib. Calculator is going to be allowed, but you are not supposed to carry the calculator. The Prometric Center is going to provide you the calculator in the exam itself. Okay. Now let's talk about On system also you can, on system there is not going to be anything. They will provide you the hard calculator, the usual calculator they're going to provide you. We discussed about the distribution. That means the company is giving the distribution. Yes, it is going to be the simple one, not the scientific one. Distribution could be anything, guys. It could be cash, or the company could be giving you property also. It could be anything. So if the company is giving you, cash, you are going to consider whatever the cash company is giving. If the company is giving you any property or any asset, in that case, you will consider the fair market value of the same. Absolutely, Lalit. You will consider the fair market value of the same. Is that point clear? So if I tell you this is going to be the ENP. ENP is 100. The company is giving the cash 10. The company is giving the property for which net book value, which is also called the adjusted basis for the company, is $50. Fair market value is $20. Can you tell me how much for the shareholder? What is going to be 1, 2, 3, 4? Let's say basis is 0. Okay. So yes, it is going to be 30, nothing, because this is going to be the distribution 0, 0. It is going to be, yes, Arjun. So this is going to be 30, 0. Any problem, guys? Is that okay? Shall I move? Is the treatment okay? Cash, fair market value is okay. Okay. If hear me out carefully, guys, else we'll keep on repeating this. Yes, Rishikesh, very good point. I'm just coming to that only. If the company is giving you any asset, or the company is giving you any property for which there is a fair market value, let's say $200, and the net book value is $80. Such assets, we call it the appreciated property. Such kind of asset, we call it appreciated property, for which the fair market value is higher. What is appreciated property? For which fair market value is more than net book value. Is that point clear? Appreciated property means anything for which the fair market value is more than the net book value. Hear me out carefully. Whenever it is appreciated property, whenever the company is giving any distribution of the appreciated property, company is going to recognize the gain. Absolutely, Lalit. So company is going to recognize the gain for this. But if the company is giving you depreciated property, don't think depreciated property means that you are charging the depreciation. Depreciated property here means when the fair market value is less than net book value. So that means, will you recognize the loss in this case? Answer is not at all. No loss. Only gain. Is that point clear? In fact, this thing about the gain loss, you'll find everywhere the IRS is not going to allow you to recognize the loss. It will always keep on saying gain recognized, gain recognized, gain recognized, but loss only one place where we'll discuss in the liquidation, otherwise never in that case. Loss is going to be ignored, absolutely. Is that point clear, guys? Okay, let's try one question. Company is giving any asset for which the fair market value is $100, net book value is $30, and can you tell me first of all how much is going to be the distribution? What is going to be the distribution for you? Correct, no problem. $100 is going to be the distribution. How much is going to be gain in the hands of company? Correct, $70 is going to be the gain in that case. How will you treat $100, guys? Same basis, 1, 2, 3, 4 will remain the same. No problem in that case, it will remain the same. Is that point clear? Okay, let's do one more question. Ashish, you want to copy this? Done, shall I move? Sure. Yes, this is from the company perspective, you're correct. Lalit, let me know once you're done. Yes, Veer. So the gain which I discussed, it's from the company's perspective. You're right. I'll come back to that, Lalit, once you're done. $70 is double taxed. Why are you saying 70 is double taxed? Okay, you're saying 70 is going to be double taxed. No, it's not going to be double taxed. Why is it going to be double taxed? No, that's how the entire C corporation is going to be all about. If you look into it, whatever the profit we are looking in this case, whatever the profit we are receiving, that is also taxed in a way. So yeah, that is the case. Rule of 70 has nothing to do in this case, Ashish. You are going to consider only your distribution. Whatever the distribution of 1, 2, 3, 4 will remain as is. No change in that case. Kashish, you asked me some question. What about the treatment of the treatment? This 70 is going to be taxable in the hands of company, Kashish. Absolutely, Urja. It is going to be recognized in the income. Don't say income statement, because income statement is from the US GAAP perspective. I would say this is going to be taxable as per the IRS. I'm not sure how it is going to be treated as per the US GAAP. For that, you will read far. But it is going to be taxable as per IRS. In the tax laws, it is going to be taxable. Is that clear? Okay, let's quickly try one question. It is giving the property fair market value is $20, net book value is $100. How much is going to be the gain? Zero. Okay. How much is going to be the loss? Nothing. No loss. Okay. I trust you. How much is going to be the distribution? How much is going to be the distribution in this case? 20 or 80 or 100? Correct. It is going to be 20 only. You guys can copy this chart if you want. Let me just make a quick summary for you. If the company is giving cash, distribution is going to be cash. If the company is giving property or any other asset, in this case, the distribution is going to be fair market value. If the company is giving the appreciated property, we know what is appreciated property, which is fair market value is more than the net book value. In that case, there is going to be a gain here, and here distribution, what is going to be, I'm just writing here common. Distribution is going to be cash here, here it's going to be fair market value, here it will remain the fair market value, no change. Here there is going to be a depreciated, which means fair market value is less than net book value. There is going to be a loss, but you're not going to recognize the loss in this case. Here it is going to be fair market value. Is that clear? Let me know once you're done, I'll move. I'm glad, Isha, Virat. Anytime. I'll try to keep more doing like that so that it is going to be a little helpful. Done? Shall I move, guys? Okay. Let's try one question quickly. So if the company sells and then, yes, if the company sells and then give the cash to the benefit the shareholder. Yes, Lalit, you can say that. You're right. This slide, right, Sapna? Okay. Okay, everyone, please do this question. Loss, you will not recognize the loss. You can say the loss is going to be zero. Guys, I'm doing very important concept. Please pay attention, else we'll again repeat this again, everything. The company is giving 10,000 as the cash to shareholder. Current year's earnings and profit is zero. Accumulated earnings and profit is going to be zero. Let's say basis is also zero. Can you tell me 1, 2, 3, 4? Zero, 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 1, 0. Everyone is getting the same, no problem. Easy, shall I move? Okay. Company is giving the property. Company is giving the property or any asset. Earnings and profit, zero. Fair market value of the same is 50. Net book value is going to be $10. Basis, $10. How much is going to be the cap gain? Rather it is good. You are saying 1, 2, 3, 4, so it is 0, 0, 10, 40. It's going to be 10, 0. Understood, Lalit? Think carefully, guys. You're missing one simple point. You're missing one point in this case. Lalit, have you done this in FAR? Or you have read this earlier? What is 2? AP is also 0, right? Okay. Think carefully, guys. Is it, first of all, think carefully. I'll just move you there. Okay. First of all, is it appreciated property? Is it depreciated property? It's an appreciated property. So that means there was no gain, but now you are having the gain. Correct? Earlier it is 0, but now you will have a gain because it's the appreciated property. How much is going to be the gain? Gain is going to be 40 in this case. Can you try it now? Everyone, please try. Correct. It is going to be 40 now. It is going to be 0. It is going to be 10 now. It is going to be 0. Is this clear, guys? Any confusion? No? Okay, let's try quickly one more question. Company is giving, yes, Urja, because earlier there was gain, earlier there was no gain, but because you have to recognize the gain, there's a 40 here. Because Ashish, distribution is exhausted. Distribution was 50 in this case. Distribution was 50, 40 is here, 10 is here, so that means finish. So if it is loss, Urja, are we recognizing the loss? We're not recognizing the loss. So your question is, Urja, what about it is a depreciated property? Nothing. So Urja's point is, if it is loss, yes, absolutely, no problem. It would just remain the same in that case. Yes, Akash, because no information is given, so we don't have anything. It's the isolation, one transaction is given, so we can take that. Ashish, is that okay? Does that answer your point? OCI is I think OCI is going to be our accounting concept, other comprehensive income. We will take, that's how we did, Ashish, if you remember, this is what I did. Always FMB, always FMB, always FMB. Okay, let's try. You are giving the property, fair market value is $100, net book value is 70, earnings and profits, current year's earnings and profits is 10, accumulated earnings and profit is going to be 0. Basis is also, let's say, 0. Can you please tell me 1, 2, 3, 4? I don't know, Virat. You tell me what should be the basis, what should be the distribution. Okay, so this is going to be 30. So that means this will becomes 40. So distribution is going to be this. Whatever the asset fair market we are receiving, that's going to be your basis distribution. So this is 40, this is 0, this is going to be 0, this is going to be 60. Clear? Why 50, Sapna? Yeah, this is 30. That's how you will add it. And that's 40, that's 60. Any kind of question, guys, in this? Is it good? Shall we do one more question or are we good? Okay, Ashish, so do with me, okay? How much is the distribution, Ashish? Let's quickly do that. How much is the distribution? How much is the distribution, Ashish? $100, right? So 100, from this 100, first 40 will go. Correct? This is 40. So this will go. Then this is 0. So this is 0. Basis is 0. So this is 0. Anything which is on the top of it will be cap gains. I'll come back to that. We have not discussed about the basis, Lalit, yet. We have just not discussed about this. I'll come back to that. Can you please read this, guys, page number 46, this, and read this. No, dividend income is not going to be. And once you're done, please read this also. And in fact, pass key also. Sorry, I'll just explain you one by one. Sorry, let's do it quickly. Sure, Arjun, you guys can read from me from my PDF. Please, first page number 46. It's about matching the source. That means we are talking about the pro rata and the chronological. I have not asked you to read this. Please read this portion, page number 46. Arjun and everyone who does not have a book, please read it from my PDF. And please let me know whenever I need to scroll. Sure, Virat, I'll tell you page number. Can anyone tell Virat the page linking what we have done, the relevant linking page numbers? Yes, so it's R1, page number 17, and page number 45, Shakil, for R4, right? Okay. Thanks, guys. Thank you so much. So this is the only illustration, constructed dividend you leave. I'll do with you. Now you read this page number 48. Please come on page number 48, shareholder taxable amount. Anytime. Sure. Preeti, have you read? Shall I move? No, Ajay. Okay. Are we done? Where is general rule? The general rule is the payment of the dividend does not create the taxable event. A dividend is the reduction of this. Okay. Understood. Good point. I'll cover that. Understood. Just to give me a minute, I'll let Arjun read it. I'll explain that. Any point, any problem besides this general rule? Okay. So what it means, guys, it says that it basically means when the company is giving any distribution, whenever the company is giving the distribution, and let's say earnings and profit is 100 and the company is making the distribution of 10, how much is going to be the dividend for the shareholder? Correct. 10 is going to be dividend. Is it taxable for the shareholders? Yes, it is going to be taxable for the shareholder. Is it going to be taxable for the company? No, absolutely not. That's the meaning of the general rule, first point, that it is not going to be, dividend is not going to be taxable for the company. Okay, that's the first point on that case. Second, whatever the distribution you're doing it. For example, if I talk about any company, whenever any company says this is your PAT is, let's say, $100. From this, if the company gives the, where will this PAT goes? Where does this PAT goes, guys? For any company, it's go to your balance sheet, right? It goes to your reserve and surplus. But out of this, if you are paying the dividend, let's say if you are paying the dividend of, let's say, $20, how much it will go to retain earnings and the P&L and the balance sheet? 80 will go. So in this case, though you're not paying tax on the $20, but it is reducing your ENP, isn't it? Similarly, here also, you're not paying tax on the $10. We agree with that, but your ENP is going to reduce with this. This is going to be $90. That's the meaning of that. Both the points clear? Let's go back and read that again. General rules is the payment of the dividend does not create a taxable event. Better point is write a note here, though it is writing here clearly, but still just to avoid that, for company, write it here so that it should not confuse you. A dividend is a reduction of the ENP. So obviously it is going to reduce your, just like a normal distribution itself. Clear? Sapna, is that okay? Okay, Shivam, this one. Okay, well, let me know once you're done. Shall we move? Okay, let's see. Okay, let's say if the company is having sales of 100, COGS is 20, so your PBT is going to be 80. Let's assume the tax rate is 20%. How much is going to be the tax? $16, correct? So your PAT is going to be 64. Now, this 64 will go to shareholder, and shareholder will also pay the tax on that, correct? So that's how the double taxation is working. So what companies does in this case, company says, okay, let's do one thing in this case. Rather than giving the dividend, let's start in this case, rather than giving this, let's show the salary to the shareholder. So here you're saying salary to shareholder, how much? Let's say $60. Then the PBT, how much is the PBT? PBT is going to be $20. Tax is going to be $4. PAT is going to be $16 in that case. So by this, you have substantially, obviously the salary is going to be taxed for the shareholders, no problem in this case, right? But Urja, here you're getting the deduction, isn't it? Earlier, it is getting taxed twice, but here it is getting taxed at one level only because you're getting the deduction in this case. Absolutely. That's why whenever you are giving unnecessary advantage, to the shareholder, something which you're just doing it because it's not that very genuine, it is not a very bona fide transaction, but you are doing it so that you can unnecessarily pass on the benefit to the shareholder, such transactions are treated as a constructive dividend. And we are going to treat this as a dividend only, not as the salary itself. In a way, yes, you can say that deemed dividend only. Okay, read it from the book. This is going to be, just read up till here. Which point is not clear, Arjun? Can you just tell me? So if you are giving any benefit, if the company is giving any benefit to the shareholder, which is not really a genuine transaction, that is going to be considered as a constructive dividend. For example, if you're giving excessive salary, if you're giving excessive rent, if you're giving interest-free loan, if you're giving the reduced loan, all of it will be categorized as a constructive dividend, and the page number is going to be 47. Urja, it is going to be generally we will look into the fair market value. What is the skill set the shareholder is owning? Generally, what should be the salary of the other people in that case? So on all those things will be considered. So generally the arm's length is going to be considered. Yes, 48 to be, I encourage, do not do that. Don't try to link with that, but yes, you can say that. Absolutely, Rishikesh. It is going to be considered as constructive dividend, and whatever is your treatment of the dividends will follow here. Done. Yes, it was any which was taxable in this case, but the salary is going to be disallowed. Done, guys. Shall we move? No impact. Waterfall is not going to, again, you are going to confuse this. Waterfall has nothing to do. That point is going to be, the same waterfall will for this also. It is going to be treated as a dividend only. Not going to change with the waterfall in this case. Clear? Yes, absolutely. Okay, one last topic, guys, I want to cover for today. Is it getting too much concept? Is it getting a little overwhelming, or shall I add few more? Is that all good? Is the same thing going for the individual taxpayer of the salary, or will become dividend for him as well? Same treatment is going to be here. For him, it is going to be dividend only. Yes, Arjun, that's how I started. First, you need to undo the learnings of India. Only then you'll understand it better. Okay. One last thing, guys, I'm going to cover is the stock dividend. What is stock dividend? Anyone? What is stock dividend? Correct. Giving shares, but is it like you are paying the money and the company is giving you the shares? Bonus, ESOPs, bonus shares. Good, Raj. Yes, it is. It is just like in India, we call it bonus shares. Absolutely. Correct, Lalit. It's the bonus shares. What do you think? Would bonus shares be taxable? No, ESOPs are not the stock dividend. Yes, on the face of it, it looks like no, ideally it should not be, that it should not be taxable. That's the general rule, that it should not be taxable in that case, right? But there is one exception for this. If, yes, it is going to divide the basis. First, let's do the simple way. Let's say the shareholder is having 100 stocks of the company, which the shareholder has bought for $20 per stock. How much is the basis for the shareholder? Total basis $2,000. Correct, $2,000 in that case. Let's say company is giving 100 more stocks. How much is going to be the total basis now? 4,000. It will remain the same. Okay. It will become 4,000. So it is going to be 1,000, Arjun. Correct. Not going to change at all. But eventually 2,000 divided by 100 plus 100, it is going to be $10 in that case. So per stock price is going to reduce from 20, it is going to $10 in that case. Okay, this is going to reduce. This is called, what is this called? This is called spreading the basis. That's called spreading the basis. Clear, guys? Is that okay? Sure, Shivam. So you are already having 100 stock of the company, which you purchase for 20 per stock. So that means total basis is 2,000. 100 stock, 2,000 basis. So per stock value is 20. You additionally got 100 stock. You paid nothing for it because that's the stock dividend. It's the stock dividend. You got it for free. That's why 2,000 divided by 100 plus 100, it is going to be 10%. So it has gone from $20, it has become $10 now. It has reduced the basis in that case per stock basis itself, because you're not paying any cash for it. Clear, Shivam? No? Okay. Pretty much the same impact is going to be for the stock split also. Pretty much the same impact is going to be for the stock split also. I'll come back to the stock split. It'll unnecessarily confuse. As I said, this is going to be non-taxable. This is going to be non-taxable. But if the company is giving you a choice, company gives you the choice. What is the company is giving you the choice? Company says, do you want the stocks or do you want the cash? Or do you want any other property? Whenever the company is giving you the choice, in that case, it is going to be taxable. Earlier, not taxable, but whenever the company is giving the choice, it is going to be taxable. Is that point clear, guys? So in your question, you have to look, is the choice given or not? In that case, it is going to be taxable. Okay. Company is giving, there are, let's say there are only two stockholders in the company, there are only two shareholders in the company, let's say A and let's say B. Company is giving stock dividend to A and company is giving cash to B. Would it be taxable for B? Okay, yes. Would it be taxable for A? Yes. Yes, it is going to be Rishikesh. It does not matter. If you are giving to one person cash, if you are giving to other, in this case, stock, in that case, no matter who is receiving what, in that case, it is going to be taxable. Is that point clear? Let's read it from the book. Stock dividend, just quickly read this. It's going to be good. And do this question also. Sure, Ashish. Ashish, I'll explain you verbally. People would be reading from my book. So what I was saying, that company is giving, there are two stockholders only, stockholder A and stockholders B. Company is giving to the stockholder A stocks only, and to B it is giving cash. So it does not matter what the other shareholder is receiving. As far as company is giving the different value, different things to the different shareholder, it is going to be taxable in that case. So no matter who's getting what, in that case, it is going to be taxable. So you cannot say, okay, I am getting stocks, so I should not be taxed. No, because the company is giving the different amount to different people, it is going to be taxed. Whenever you're done. Read this question also. I didn't get your point. As per case, what other line means stock other? I didn't get your point, Ashish. As per case. I didn't get your point. What does the line mean? Stocks are old and the new ones are identical. Yes, Ashish, nothing is written in this, but maybe I'm telling you from my experience. Not many things. It's a very concise book. So I'm just telling you that's how it happens. Okay. The basis of the non-taxable dividend, where the old and the new shares are identical. So what does that mean? Sometimes what happens, different class, the many stockholders, especially in the US, they have a different class. For example, if you look the Alphabet, Google, Berkshire Hathaways, all of the companies have a different class A, class B in this case. So it depends where the old, that means what are you holding? Let's say you are holding class A and the new shares, and you are receiving class A only. So obviously, if you are the shareholder of the class A and you are receiving class A only, then it is going to be determined by the old value by the number of shares. Only then you can divide it and calculate the value in this case. But if you are receiving a different class of shares, in that case, you are going to adjust it on the basis of fair market value. Clear? Any questions, guys? All good? Shall we move? Okay, a very generic case I'm going to talk about. If we deliver or new class of unlisted. Generally, it should not happen, Lalit, when they are giving the company, if the new class are unlisted. If it is unlisted in this case, generally the company will tell you that this is going to be the book value. So has to be some basis on that case. So company is going to tell you that this is going to be the basis in that case. Okay, guys, I'm just telling you one generic point which we are going to use substantially in that case, right? If the transactions what we are doing, if the transactions we are looking into this is non-taxable, that means any transaction we are doing right now or anything in that case, it is non-taxable. In that case, okay, I'll probably tell you later because we have not done enough things. Maybe you will not be able to gauge that. Sorry, my bad. Let's not do it because honestly, it will confuse you. Something we are going to do it going forward. Now it does not make sense to do it. Okay. I think we can stop here. Let's quickly revise few pointers in that case, and then we'll try to do MCQs. If time permits, I'm gonna move to other pointers. Sure, Virat. The point is, have you understood Lalit's point? So if you are receiving anything, company A it's a listed company, and the company A is giving you, let's say, class B shares. Lalit is asking that it is the unlisted stock, correct, Lalit? In that case, Lalit's point is, how would you get to know the fair market value? Because you don't have it last listed in that case. In that case, you will use the net book value. Yes. How will you spread it otherwise? Okay. Okay, I think we can move. Can we quickly revise, guys, what we have done today? Then we can move to the MCQs directly. As I said, we are going to, this is IRS. IRS is going to be the central authority, just like a CVDT in India. Guys, it's everyone's revision, so please be involved with me. We do not say this is the assessee, we say the taxpayer. Okay, one more point in this. In India, we use the year as this is previous year, this is assessment year. We don't use this. We call it the current year. Whatever the year we are talking about, we call it the current year or the previous year. We don't say the previous year, assessment year, anything like that itself. Okay. So assessee, we are not going to say the assessee, we will say the taxpayer in that case. We are going to discuss the federal tax. We are not going to discuss the state tax, county tax, local tax, nothing. We are not going to discuss that. Tax Cuts and the Jobs Act, it is a significant change which has happened in the 2018, which has pretty much changed many things in the US context itself. No sanctions learning, no case laws learning, nothing learning, barring the few forms, few sections, maybe I'll tell you here and there, that's all. Then we talk about business entities. Business entity, as I discussed, could be of the two categories. One is the double tax entities, something which is where the tax is levied at the two levels. So that means company is getting taxed, and when the profit is giving to the shareholder, it is also getting taxed in that case. Second is going to be pass-through entity. That means all the profits and everything gets passed on to the shareholder. In that case, something like S corporation, something like a partnership firm, something like a state. Everyone is going to be like that only. Why it is called S corporation, C corporation? Because it is governed by subchapter C, subchapter S of the IRC. Corporate distribution, that's how I started the first thing. Corporate distribution is not going to be equal to the dividend. We will follow the waterfall in that case. If it is satisfying 1 and 2, in that case, it is going to be taxable dividend, otherwise not. Basis, we discussed what is the basis. Basis is something, for the time being, basis is nothing but the basic cost in that case. Basis, as you told me, the basis can never be negative. In that case, basis can be zero, but basis can never be negative in that case. Second, once you recover the basis, anything on the top of it is going to be the capital gains in that case. We have done this. That's the basic waterfall. You're going to follow it. First is going to be current year, second is going to be accumulated, third is going to be return of basis, non-taxable return of capital, fourth is going to be capital gains in that case. We have done these multiple illustration in that case. Okay, then we discussed about this scenario, right? Everyone, please do with me. If it is plus and plus, would you do net off? If it is plus, without looking into the screen, if it is plus plus, would you do net off? No. What is the waterfall? Waterfall is going to be 1, 2, 3, 4. Okay. Current year is negative, accumulated is negative. What is going to be the waterfall? Current year negative, accumulated negative. What is the waterfall? Correct. It's going to be 3. It's going to be 4 in that case. Current year is positive. Current year is positive. Easy way to remember it. Current year is positive, and we are doing the distribution in the current year. So life is very good. It is going to be 1, 3, 4. Easy way to remember, it is current year profit, and the profit of the current year is also positive. So it is going to be 1, 3, 4. Absolutely. Current year is negative. Now there's a problem. Current year is negative and you are distributing. So current year is negative, accumulated is positive. You are going to net it off. But after netting off, you have to gauge the position. If the net is negative, then what is going to be the waterfall? Correct. Waterfall is going to be 3 and 4. If the net is positive, it's going to be net and 3 and 4. Very nice. We have done a couple of illustration on this. Now, multiple distribution, guys, we discussed if it is current year's earnings and profit, you're going to take it the proportionately on the amount of the distribution in that case, not the period wise. And if it is accumulated earnings and profit, it is going to be chronology. After that, everything will follow the chronology only in that case. I would suggest in this case, this table, this format is going to be very, very helpful if you follow this. And one more advice, whenever you find such a question, on a broad basis, on a total basis, first calculate what is the figures coming, so that once you plugging the figures here, you can cross check it is correctly coming or not. We have done a couple of illustration in that case. As we discussed, the return on capital, non-distribution, everything is just the same meaning. It has the same meaning in this case, no change in that case. When the company is giving cash, cash is going to be taxable. When the company is giving property, guys, what is going to be the distribution? Yes, the fair market value is going to be the distribution. When the company is going to recognize the gain, appreciated property or depreciated property? Appreciated property, absolutely. It is going to be appreciated property. What about depreciated property? Would you not recognize the loss? No, we are IRS. How can we allow you to book the loss? It's just going to be the gain in that case. Basic waterfall will remain the same in that case. The question which you need to, the point which you need to be take care of, that whenever we are talking about the gain scenario, appreciated property, your ENP will go up. Your ENP will go up, and accordingly your taxable dividend will automatically go up. That's the tricky point. That's where they'll try to trick you a lot. So automatically it will go up in this case. We have done this always and always. For you, the distribution is going to be always fair market value in this case. We have done this. Then we talk about that in case you're giving the unnecessary benefit to the shareholder, it could be anything. It could be you're giving the salary, excessive rent, you're giving the interest-free loan, in case you're giving the reduced loan, any benefit which you are passing on, that benefit is going to be the constructive dividend in that case. Stock dividend, that means the bonus shares. Generally, stock dividend is not going to be taxable, but if you are giving choice, guys, would it be taxable? Yes, it is going to be taxable. If the question says the choice is not given, but the different amount is given to the taxable amount, would it be taxable in that case? Yes, still it is going to be taxable. No problem. Even it is going to be taxable for the person who is receiving the stock. Yes, it is going to be taxable for that person also. Okay, I think that's pretty much it. Let's try a few questions on it, guys, so that we'll know whether we are doing it well or not. We don't say, we say just the current year only, Akash. We don't say the assessment year or the previous year. We just say the current year. Yes, Lalit, pretty much like a current retained earnings only, but you understand well, retained earnings is an accounting concept, right? So everything is going to be driven by the accounts only, but ENP is a more taxation concept, so it is going to be driven by that. I already discussed unlisted share point. It's not even a point even that if you're getting the different shares and which is unlisted, in this case, it is going to be net book value. Is that okay, Lalit? Rather, Lalit, accumulated earnings and profit is going to be, no, the company automatically informs that. On 31st December, the company has made the non-liquidity distribution for the following. In this case, this is going to be 50,000. This is going to be 25,000. Should it not be 100,000? And adjust this? No, correct. It's going to be 75,000. Good. I think there's some error in the question. You tell me your answer if your answer is coming different. Okay, I think everyone is getting it same. Heron Inc. made the contribution of the real estate with a fair market value of 100,000 to its only shareholder. Heron's basis in the property was 60,000. Okay, so the profit is going to be 40,000 plus the current year's earnings is 10,000. So this is going to be 10,000 plus the accumulated is going to be 20,000. So this is going to be 70,000. How much is the distribution, guys? Nothing is given about the distribution. I don't know how you are calculating the distribution. How much should be the distribution? Correct. They are not going to specifically say that this is going to be the distribution. They are saying fair market value is this. So very good. This is going to be the distribution. From this 70,000 is going here. How much is the basis? Is 5,000. So 5,000 will go. And the balance 25,000 is going to be capital gains. Correct. ESOP, we are going to discuss it. It will depend on Ajay, which kind of ESOP we are talking about. We have a full dedicated module for ESOP only. We'll talk about this. So Ashish, whatever is the value coming for the first and second, which is the 70,000, is going to be the dividend. Jane is a sole shareholders of the Buttons Inc. has the accumulated earnings and profit of 65,000. Okay. At the beginning of the current year, the current year's earnings and profit is going to be 35,000. Buttons pays the property distribution to the Zane during the year. Fair market value is going to be 150. How much is going to be taxable gain? Taxable dividend. What are you saying, guys? I don't understand. You are saying this is going to be 50,000. So 65,000 plus 35,000. Okay, so yeah, it is should be 100,000, right? Correct? B should be the answer. No. Do you remember I said whenever it is an appreciated property, you should be careful on that. Everyone fall for this. Most of the people fall for it. This is appreciated property, guys. This will be added. That is going to be taxable dividend. Hence, C is the answer, not B. Is that clear, everyone? Not clear, Arjun? It is appreciated property. Would you recognize gain on appreciated property? Would you recognize the gain on appreciated property? So that's the same thing. It is current year, 35,000. Accumulated earnings and profit is going to be 65,000. You will recognize the gain here, 20,000. This is going to be 120,000. Adjusted property means net book value. Adjusted cost of property, absolutely. Clear, Ashish, is that okay? Yes, you will find most of this in the not in the book, but in your in your software. Most of the MCQs. Some I picked up from my database also. So yeah. Yes, Becker has given the solution. Read this question carefully, guys. Lalit, the question is not reportable. It's the negative rather. James Corporation made the various payments and the transfer to the shareholder, Rob and Jim. During the year, which of the following is not a reportable distribution? So something which is not a reportable distribution. So something which is going to be something which is not reportable means something which is going to be taxable or not taxable, something which is going to be considered dividend or not. Correct. use of the, obviously in such a scenario, always think whatever the advantage, whatever is the advantage you are giving to the shareholder, use of the company vehicle by the daughter for the college, here you are giving the advantage. So this is going to be constructive dividend, so not the answer. Transfer of the stock held for this, again advantage, not the answer. Monthly cash payment, not the answer, hence A is the answer. Reasonable salary you're giving, which is good enough. Clear? Okay, let's see it here. I don't know if someone was asking me the question. Sabir, you were asking me the question about the fair market value. Yes, I agree with you. Fair market value 150,000 is the distribution, but we are not looking for the distribution. We are looking what is a taxable dividend, and the taxable dividend is going to be your current year's earnings and profit, and it is going to be accumulated earnings and profit, which is 120. You're absolutely correct. It is going to be 150 minus 120, and is basis given? No, basis is not given. Anytime, Sabir. Shall I move, Ashish? We have till 9:30. Okay, so out of this, Arjun, okay, tell me out of it, reported means reportable distribution. It is not reported, it is reportable distribution. It is not considered to be distribution because it is normal salary. If you are giving the normal salary to your staff, would it be considered as a distribution? No, that is not a distribution. It is just a business expense for you. That's why A is the answer. It's not a distribution. Yeah, but you are giving the normal salary to them. Absolutely, Shakil. Excessive salary is going to be constructive dividend, which is going to be reportable. In my example, then that would be a reasonable salary as well. I didn't get your point. I said that this is the unnecessary salary you're giving the salary. That's what I said. You're giving the unnecessary salary. And if it is unnecessary salary, it is going to be constructive dividend. Guys, we have not specifically dealt with this. We have not specifically dealt this. Yes, I have not dealt with this because you remember I was telling you the transaction and the basis. So you can skip this question. You can skip the first part of it. You can still tell me the distribution. You can ignore the basis. You can tell me the distribution. What is going to be the distribution? No, Akash, distribution is going to be, Akash, the distribution is the fair market value. Fair market value is going to be the distribution. So obviously, this is very vague question, Aditya. Sorry, Arjun. How do we decide any transfer pricing laws also? You have to see that arm's length prices, whatever is the arm's length for this. Okay, you will look for the arm's length in this case. But here we are not looking for the distribution. We are looking how much is going to the gain, and gain here is going to be 100,000. Correct. Ashish, you want to see this question? We have already done this. Can you just tell me the question, I'll answer that because it will flow. It will break the flow for everyone. You ask me a question. Correct. B is going to be answered. This is going to be taxable for them. It's a market transactions, yes. It's a good question. Think carefully and answer. Okay, this question is going to be try. First of all, guys, in this case, Walnut is a C corporation that was started in 2008 at the beginning of the current year, has the accumulated profits of A and P is 100,000. Current year, he has made the 5,000 distribution to the shareholder in the first month of each quarter. At the end of the quarter, current year, the Walnut has gross income. So the gross income is going to be 150,000. 140 is going to be expenses, which is 140,000. 10,000 plus you are having the fully tax exempt. What you are having? You are having fully tax exempt organization. In that case, how much it is going to be? 5,000, right? So it is going to be 15,000. How much it's going to be the per quarter distribution? It's going to be 3750, 3750, or the 3750 in this case. What are we asking in the question? What the part of the second quarter distribution is treated in this case? So that means How much is the per quarter distribution is happening? 5,000. Okay. Okay. 5,000 is per quarter. So from this, you are going to reduce 3750, and balance 1250 will be going to accumulated earnings and profits. Correct. 1250. Clear? Okay, Ashish, can you tell me which point is not clear? So after 3750, what is the next comes? After current year, what comes next? Accumulated. So that's what they are asking in the question. What is the accumulated? And accumulated is going to be correct. Balance is going to be 1250, which is going to be accumulated against the accumulated only. That's why. Which of the following statement is correct? Which of the following statement is correct? The corporate distribution to the shareholder exceeds the earnings and profit and exceeds the shareholder basis in that case. The shareholder has a gain on the sale or exchange of the property in that case. Absolutely. No, it has no gain is incorrect. Correct, Himanshu? You will have a cap gains. The moment you recover your basis, it is going to be your cap gains. Is that Ashish? Done, Ashish? Correct. You have not sold the property. Company has a gain from a sale of the exchange property. No. It's not saying that you will have a gain on the sale or exchange. It is saying the treatment is going to be just like a gain or exchange in that case. So when you're selling or you're exchanging, what kind of treatment do you have? You will have capital gains, right? Something which I think someone was also asking me that we have the capital gains only when we are selling. No, you have a capital gains here also. Why not A? Because the share dividend income from the sale of from the sale or exchange, you do not get the dividend income. If you are selling anything, Virat, if you're selling your share, would you get the dividend from that? If you are owning any shares, then that's why it is not correct. Correct. It is going to be capital gain in this case. Absolutely, Vivek. What is the tax treatment in the case where the distribution gives the cash or the other property to some property and gives the cash to others? The distribution is treated as the taxable distribution to all the shareholders. Absolutely. Good. The board of directors of the Walden Corporation authorizes a year in that case to its three shareholders. Each distribution would be equal in value, but the shareholder would choose to receive the distribution in cash. In this case, absolutely, it is going to be like a distribution in that case. Like exchange, Lalit, we are going to discuss it, but what happens in the like exchange, that one person is giving his own asset and other person is giving another asset. That means ditto asset you are exchanging, that's called the like exchange. Okay. No, exchanges with the commercial substance only. So for example, you like any of my property, I like any of your property, and we are exchanging in that case. That's the exchanges. Very well. In fact, if the fair market of my product is going to be higher, I will have the capital gains treatment also in that case. All of it will be there. We'll discuss this. Just 5-10 minutes, I'll take it. That's all. Just 5-10 minutes, I'm going to take it. There is no provision on the indexation. No. Again, don't think from the Indian perspective, if this happens in India, we should have this. No, nothing. Charles owns 100% of stocks of the company. Charles acquired these shares in 5,000. Watson has a total earnings of 10,000. On December, Watson gives the distribution of 8,000 cash and the fair market value of 7,000. How much is going to be the capital gain? You must recognize it's absolutely going to be 0. I don't know what is 54. $1099 DIV, guys. 1099 DIV is going to be whenever it is going to be dividend, it gets reported in the 1099 DIV. Do we need to learn this? No, not at all. Yes, Rishikesh, that's the exemption which is there in the capital gains, but not relevant. No point of discussing that. B, during the 2019 calendar year, the Lands Corporation has 40,000 cash distribution to the shareholders. The Lands Corporation current year's earnings is going to be 25,000. Accumulated earnings is 10,000. So current year is going to be 25. Accumulated is going to be 10,000. What amount would you report in this case? Yes, the total of that, 35. We are asking taxable dividend, Ashish. Dividend is 1 plus 2. You're telling, I think, cap gains. Okay. Read slowly, Virat. Do it one more time. Do it slowly. Think and do it. In 2019, Omega partially compensates the employee, Tom Jones, with 100 shares. Okay, so the company is giving to its employees, TJ, 100 shares. Okay, Omega stock selling at 200. Tom sells it that this, it does not matter. What is the employee compensation in that case? Why zero, Sapna? Because you are saying it is not giving the cash. Is that because of that? No, it is going to be. You will claim it. See, it's just like if you're working somewhere, you're working with any example. Let's say you're working with McKinsey, and McKinsey, rather than giving you the cash, McKinsey is giving you any other property in that case. In that case, whatever the McKinsey is given, in that case, that is going to be the deduction for it. No, there is going to be a deduction. Because this is at least instead of the cash, they are giving you the stock, and eventually that should be the cost for that. So yes, C is the answer. Yes, anything. For example, if you are providing the services worth 20,000 and you are getting for 50,000, then that's a problem. Which of the following statement is correct regarding the distribution of amortized property? Okay, it should be a good thing or a bad thing that everyone is saying the same. Which of the following statement is correct currently regarding the distribution of the amortized property? Corporation recognizes again if the fair market value is more, that means you are talking about the appreciated property, which is absolutely correct. Depreciation recapture rules, we are going to discuss this also, Lalit. In this case, there is a special category of the asset which we see the that is having the depreciation recapture rules. Clutch Corporation decides to distribute this. They were given a choice in this case. Correct. A is going to be taxable to each employee. Correct. This question, Arjun. Sorry, Ashish. So Ashish, in this case, if the company gives, let's do this. If the company gives the cash to its employees, let's say $10,000, should the company claim the deduction for it? Employee deduction? If the company gives the cash to its employees, should the company claim the deduction? No? Yes. So instead of, in this case, instead of giving the cash, they have given the stock. At least the company is giving something in that case. So hence they will get the deduction for this also. Okay. Okay. We can stop here because that's how it is. 100 stocks at the rate selling at 200. 100 shares selling at 200. So that is 20,000. Clear? Okay, guys, would that be too overwhelming? Too many concepts? Would it difficult? How is it? Was that okay? Okay, I would suggest, guys, I would suggest that please stop linking that with the Indian context. It is going to be unnecessarily confusing for you. Please don't do that. Don't do that. Wherever there is necessary, where there is even an iota of the connection, since unfortunately I'm also a CA, so I'm aware a bit about the Indian tax. I'll tell you, don't try to link this unnecessarily, you'll confuse yourself, right? That's why I'm saying it, because now when I'm going to talk about the incorporation, it's just going to blow your mind, because it is absolutely different in that case. Okay, so that's why I'm saying just not confuse in that case, would be great for you only, that's all. I don't think, Himanshu, you can get the PDF of the book, but what you can do is you can go to your software in your backer software. You can find the book over there, but not the PDF, I guess. No, Vivek, I'm not going to tell you, because you're going to read that and unnecessarily you'll confuse yourself. So come fresh, but I would highly recommend the topics we have discussed today. It is going to be extremely important, not only from the exam perspective, but also from the perspective of when we are going to do the S corporation, when we are going to do the partnership. If you are not very thorough with these concepts, trust me, you're not going to understand anything up in the S corporation. So hence, please revise what we have done. It's going to be great in that case. Yes, most of the questions MCQs are from there, but some would be not there. So that's okay. It is on the LMS. You guys can see it anytime also. Okay. Perfect, guys. Let's stop it here, and I'll see you guys next week. Thank you. Bye-bye.